Good morning, traders. Anthony Crudele here, and welcome to NinjaTrader live in studio. Our senior economist, Tracy Shuchart, otherwise known as Shy Girl, and she coughs a lot before the open. We're gonna have to talk about.
You're not supposed to tell people.
I know. We should do a pre-show.
No.
And of course, our boy Jimmy Cagnina, senior market strategist out there in Charleston. Good morning, Jimmy.
Good morning, guys. How you doing?
I'm doing good. So let me get this straight. Part of the plan, right? Let's get credit market stressed. Let's take down the market, and then whoever is not on the list of negotiating with us, we're going to do a 90-day pause, and that was the plan, right? And so I look at this as like, are you kidding me? Yesterday or the day before, I was talking with Pharm, and we were talking about how the market looked so loose, like it was getting ready to go limit down, and it just didn't, right? And the market had this underlying bid, and it makes me, in my head going, okay, well, obviously, some people knew about part of the plan, in my personal opinion. There's no way that this thing is, not a lot of people weren't sitting there working the bid. And, it's frustrating as a trader because you think to yourself, gosh, like what's going on here, right? They were so adamant about not, staying the course, but then this is all of a sudden part of the plan, right? You got Percent on there yesterday saying, look, we're staying true to this. And then, you come on and they come on and say, well, you know what?
You said it was a procedural problem.
A procedural problem. So at the end of the day, it is what it is. We are where we are. But, it's getting crazy. And then, I see everybody talk about this, the biggest move ever in the history of the stock market. Well, yeah, when you come off of a move where everyone's planning, protecting themselves to the downside, the market it looks like it's going to continue to get crushed. And then all of a sudden, what did we say yesterday with Bianco, right? We need one win, right? And potentially, if we get that one win, you're going to spark some, I wouldn't say that technically we weren't kind of set up for a little bit of a bounce. There's no doubt about it. But the market was still leveraged in a position to where they were going to stay to what I thought their original plan was, right? As they've been so consistent with saying, look, we're staying the course. We're not veering off this. Everybody's coming to us. They're all calling us saying this, and it is what it is. But it's another lesson, everybody, I think, why you just need to be small. You need to protect yourself at all times in this market. And to be honest with you, now that this has happened, I think that this loosens the tape up even more. I don't think that this is that bullish of a situation, in my personal opinion, because when I look at what's happening in this market now, I look to say there's a lot that we don't know, right? We already know we can't believe everything we see anyway, but this just reiterates that. And Shy, I don't know what you think about it, but this to me was just like kind of a head scratcher coming off this yesterday.
No, obviously this was a crazy move. I think both sides got hit hard. I wouldn't be surprised if we saw some sort of pullback that technically fixed the damage that was done. But what's interesting to me is that the stock market really gave a bigger move than the bond market. And the bond market is really, I believe, the reason behind their decisions, right?
Bingo.
Because they wanted yields down, and you had yields rising quickly, right? And so I really think it was the bond market, not the stock market, that caused this decision.
100%. Credit markets were getting stressed. I caught Mohammed Al-Alarian on the way home yesterday from CNBC when I was coming off of watching our Order Flow Labs guys, who are the best in the afternoon, by the way.
They're great.
And he was saying this really kind of had to be done. And I really like Alarian. I think that he's usually very common sense guy. And he was talking about how stressed credit markets were. Now, I don't watch that well, but we were talking about this every day. Bond markets, at the velocity that they were moving, you and I were saying this every single morning, right? And Jimmy, we were talking about that as well. Like, at some point, like that's just not bullish for equities. There was damage being done. We got DCP coming on today, Donnie coming in for perfect timing for this. But yeah, I agree. That's the real reason I think that this happened. So don't tell me it was part of the plan, or if it was, it's like
I
Come
think
on, man.
the bond market's played mercy with them because you have to remember, the 30-year mortgage rate is benchmarked to the 10-year. You've got corporate bonds benched to the 10-year. You got junk bonds benched to the 10. I mean, so this was wider spread than just the bond market. This infiltrates a lot of other sectors. And so, again, I think totally the bond market played mercy.
Yeah, I mean, Jimmy, let's bring you in again. You're a bond background. We had talked about this every day. The velocity of these 10-year moves. You were talking about how we were the 30-year move. You said in all the years can't remember a time or you had seen how many. I don't remember how many points the bond market even moved. And you said it was something you haven't seen in a while. What are your thoughts on all of this that's unraveled over the last 24 hours?
Yeah, I mean, the 10-year yield now is, tracking about 4.3, so it's still a little bit, elevated. The surprise yesterday to me was that 10-year, the note auction, which actually came in a tad bit better, a tad bit better than their average, right? The high yield was 4.435. Previous was 4.31, so it was a little hot. But 60% of the bids were awarded at the high yield, which you could argue that's not so great. The bid cover ratio was 2.67, which is a little bit better than the 10 auction average at 2.59. So the most interesting part about that was that happened the auction happened 5 minutes before the announcement, right? And so that's so when I look at that, I'm thinking, well, okay, there's some demand there still. On the 10-year right now, so that appetite hasn't totally dissipated. But right now we're kind of back to where we started after all the madness happened.
Yeah, I mean, and let's not forget he did tell us, right? And I wrote in my note this morning. Apparently, I don't like money because I just should have been full in long. It's like, come on, man. I mean, and it's funny because if we really look back at this, there were signs, right? And I always look at myself as somebody who tries to read the tea leaves really well. Part of me was fighting this because I'm thinking to myself in the back of my head, and I guarantee a lot of you traders out there were thinking this too, at some point they're going to try and save this market, right? Did we all not kind of think that subconsciously? Come on, tell me if you didn't, you're kind of nuts, right? But then you see Besant come on, who I think, look at this guy. He's had a great reputation. He comes in and he's saying, we're sticking to the plan. This is what it is. And Trump really seemed so committed to, keeping no, there's not going to be a 90-day pause. And remember that rumor, obviously, was it a rumor now? Was it a leak that they were going to do it? I mean, so when you go back and look at the signs, yeah, I mean, again, I look at it and go, I feel bad for people that got caught off guard on this, right? Obviously, and some people just killed it, which is cool too, right? But at the same token, it just is like, come on, man, it's getting wild.
Well, yeah. Well, and you had Trump tweeting last night at 12:45 a.m. He said, "What a day, but more great days coming." So, I don't know. Be prepared for anything, you guys.
It's funny because we go back to. We were all around. A lot of people, good morning, chat, by the way. We were all around for the first Trump presidency. You got a lot of new traders that came in after or towards the end of it. And a lot of this was always like, what's he going to do or say? We felt a lot of times this time lately, Shai, didn't we, that there's less and less of him doing this. We've not seen him tweeting nearly as much this first term.
Right.
Or
and particularly about the market.
Particularly about the market.
Yeah.
And now we're in this situation where here we are again. We're tied to this. And, again, as day traders, short-term swing traders, you just got to be small and smart. You got to work stops, everybody. This thing is going to get, you remember the movie Top Gun where he goes, I'm going to come in and I'm going to pull you, I'm going to tear you. Remember all that, right? This is what's going to happen. The volatility is going to be here to stay. And I think in a lot of moments it's going to be really good. And then you're going to have moments like yesterday. It was like you and I were sitting here at my desk. I said, there's no way I would sell this right now.
Right.
Right. I said, they're going to go up to 55. I think Pax's number was 55.09. I had 44.80. I told you to 55.10. I said, they're probably going to go up there. And you're like, really? It's another 150 points. And I'm like, why not? At this point now, everyone's chasing out like people were chasing in. I mean, it's the chase begins again. now that the dust is settled, I'll get to it later when we get to my charts. But I think we can pull back now. But again, technicals matter right now, but this stuff that's going on is going to supersede all of it. I hope everyone understands, like, this is a unique time,
Oh, absolutely. I mean, we're back to, one tweet or one post and the market moves, 10%, which is insane.
No, it is. And, just plugging this morning, we're going to have DCP in here. He's a bond trader. He used to trade in the Eurodollars back in the 80s, so he goes a long way back with PAX, and he'll be on with us for CPI today, so that'll be interesting. So obviously, we're going to get Donnie's take on this because that's going to get us an inside look at what's happening in bonds. He talks about stirs a lot. But, Jimmy, overnight, I look at the charts again. Gold's up 2%, silver's up 1.5%, copper's up almost 4% shy. Crude oil, we're going to get to that as well with you, Shai. That got a massive lift. You were talking about that, your support area. They protected that. We're going to get to that in just a second. But Jimmy, overnight, what were you seeing?
Yeah, I mean the madness isn't over. I mean, we had in the E-mini S&P, we had almost a 3% high to low swing overnight. London Open stepped in and kind of had to sell off a little bit. That's a huge swing overnight. And we had some decent volume, right? We've had about, 400,000 that's traded so far. And, we just have a pause. We don't have a resolution in any of this stuff. So it's not surprising. The other stat that's stuck in my head that I just can't get out of my head was 2008 in October. We had that, plus 10% move in the S&Ps. At the beginning of a Fed meeting, and then the next day we had I think it was 1.3% correction back to the downside. I don't remember if there was a function of Bernanke or because they did cut 50 basis points back then to get us down to 1%, or if it was just a kind of a regular market reaction. But I'm not surprised that we're going to see some sort of drawdown today, just based on that huge move we had.
Yeah, and again, I think yesterday was like there was no way I would sell it. Today, I bought some puts. I told you about this. I mean, I think we're going to head a little bit lower here. I got to be light into CPI, and we'll see how the day unfolds. But I think that I'm not so convinced that this is super bullish either. I don't believe that this – I think what this does do, it instilled some confidence that they are looking at the market, but I don't think it instilled confidence that this is figured out. And so I think that there's a two-way train here, right? And so Shai, I don't know what you think about this,
Yeah, absolutely. And I mean, Hassett came out this morning. He was on an interview on Fox, and he said he's going to present a list of deal priorities to Trump on Thursday, and they have offers from 15 countries. And so I guess we'll know more either later today or tomorrow or next week. I mean, I'm not really sure with this administration, but supposedly he's presenting it, priority deals with certain countries, with 15 countries, but he didn't name the countries to present to Trump. So we could have news trickle in that we have a deal with one or two. I know specifically they are looking at PAC Asia, so Taiwan, Japan, Korea. We'll see. Pretty much all of them have offered to buy a lot of LNG from the United States, coincidentally, and to invest in this new Alaska project. So they may get first priority in a deal. We'll see.
Got it. Again, we go back to what Bianco said yesterday, one win. If we start to see some of these wins come in now, I think, again, that will instill confidence, I think, for the longer term plan that this will start to work and markets will be calmer. I just don't see markets getting too calm off of what happens yesterday. I think yesterday was another reset, another reminder. I've already said my piece on how I think about this whole thing, but I think ultimately it's not like instilling so much confidence in the tape to where all of a sudden volatility is going to slow down here. I think if anything, it accelerates it in some ways. Not that it could be accelerated any more than what we've already had, but it doesn't. I don't think it calms things to that to the point that maybe they wanted to. But we'll see. CPI is going to be a big thing. We're going to preview that here in just a second. But before we get to this morning's Edge report, because I want Jimmy to talk about crude oil. Yesterday you talked about, I think there was something at $55, one of those big, I don't know, it was a big hedgy or somebody, there was something came out.
Yeah, Sheffield came out. I called it the Sheffield put. Who is he owns oil wells in Texas, and he's been in the industry forever. Well-known guy, but he came by and he said basically at 55, everybody should pull rigs and slow production. And so that was kind of a level where, you don't really want to go below. Not saying that we can't get below there, but for at least for now, that's again what I call the Sheffield put, because that really is getting to an area where, again, $65 is break even, some less, some more, depending on the basin. But, when you start getting at $55, that's starting to hurt a lot of bottom lines. And so you would see production, if we hung there for any length of time, you would definitely see production kind of come down for sure. In addition, what was interesting is we had like a $7.23 move from the overnight low from that 55.12 to the close or to the settle yesterday at 62, 67, I think it was. So big move in oil for the day for certain.
Yeah, and we're going to have Jimmy go over the charts here, but we're real quick preview, everybody. We've got economic data coming out today. Shall I give us a glance at that?
Yeah, so we have CPI month over month and year over year. Year over year, 2.5% is what is surveyed. We also have core index. Then we also have initial jobless claims and continuing claims.
Ooh, all right. Well, going to be a busy one. We got DCP here to talk about what's going on inside the bond market. But before we get to him, let's get to this morning's Ezra Report with Jim Cagnina.
All right, well, let's start off with crude oil now. So this is a daily candle, and the bottom wick yesterday actually I think ended up at 55.12. So they were clearly listening to Shy, and we just kind of bounced off it. We had a big seller's wick yesterday, but the thing is, we've been having seller's wicks all along on this last 4 days. So we'll see if it's sticky. Today we're having a sell-off back down to pretty much to the piercing line of this previous candle here, and I'm just going to eyeball this around 60. Spot 45, 60.5 is kind of my line in the sand. We get to close below that. I'm not sure we're going to break back up to the upside anytime soon, all things withstanding. The 8 EMA is just acting as a ceiling right now. Every time we try to approach it, we keep selling off. On an intraday chart, we do have the daily pivot is forming a really nice kind of floor here around the intraday action. In London session sold off, as you can see. 1 day min, this is a Mentler Q level, 60 spot. Well, we'll round it up to spot 50. Put support down here at 60. On the upside, we do have we have a high vol level. We also have a JAX 3 at 62, a JAX 4 at 62.45 as targets for the bulls right here. But I'm wondering if we can get over the London opening range high. We'll see how it goes later on in the day. A lot of volume here, nice point of control, approximately around 60 spot 82. So we're kind of subtle. We're still in a 60 handle, which is the good news. That's the crude picture. Going back to E-mini S&P really quickly here, and I'll start with the daily chart. I just wanted to point out we had this. This was back in the middle of March where we had this support. And, again, it's my rectangle. It's an area here. It's, 55.20-ish, more or less. And, we rallied all the way right up to it and stuck right there. And so now we're kind of selling off of that. The 8 EMA, though, is holding us up a little bit on this daily chart. And if you look at some of the options numbers here, the gamma levels, and other pivot numbers that I am so fond of. You could see this kind of looks like the crude chart, by the way, if you guys remember. Here's the range I'm talking about. 170 handle range overnight, high to low, way too much volatility. way too much price action here compared to what we normally get overnight. So, but right now we have a whole bunch of gamma levels right around that 5,400 even level. If you could just look at the last 2 hours, 3 hours worth of trading, we've been trading through that 5,400 level for a long period of time. And that's where that point of control is right now. The bottom of the value area is just the bottom of the value area. There's no prices below value. That's a little bit on the bearish side as well. For the bulls, we got that JAX 4 level just slightly above at 5420. And then JAX 1 is all the way up at 5,500, which is where you would expect it. So we'll see if this kind of volume deficit fills in between the late night little volume cluster and I guess the primary volume cluster, I would call it right here. Now, so that's kind of that's the story of E-mini S&P. Gold, on the other hand, I just want to kind of get this one in as well, real quickly here. We're driving up to that 3,200 level. Again, I mean, this is a real rally here. We have all the moving averages arcing up. The Fibonacci numbers are out the window. My RSI is crazy at 62.62. So this is looking like a bearish kind of picture here for gold. And I'll get you some JAX numbers really quickly here. So JAX 1 is at 3,100, which totally makes sense. R1 is in play right now. This is a target for the bulls at 3,151. And then above and beyond that, we have a lot of just empty sky here. So there's a lot of potential for gold to break out of this double top and keep moving on. And I'm going to squeeze in really quickly, Dolly. Apologize for this 10-year note. I'll have to talk faster. I just wanted to kind of show the daily, and then we'll move on. So this was the old area support. My rectangle down here, and that's approximately 110 spot 10, and we're kind of respecting that right now. And so we're back in that sweet spot I was talking about for the 10-year notes, right? Look at all of these days we traded through the level that we're at right now, right between the 21 EMA and the 50 EMA. So a little bit of price happiness going on in the 10-year right now. Back to you, Naples.
Look at him. We've got him in frame. My boy DCP. How are you?
Morning. I'm good. How are you guys? It was a pretty boring week, huh? Just kidding.
I mean, really, man, what's going on?
Jeez, I'm literally catching up with a bunch of DMs here, but what can I say? The SOFR trade was a classic flight to quality trade that started in mid-February. I wrote a tweet out back then saying the tariffs were going to cause uncertainty. There was going to be like an insurance policy kind of trade, and being long the SOFRs was probably a good hedge or a good play for the next couple of months. That all kind of blew up and culminated when they presented those ridiculous levels of tariffs last week, and we got a massive blow off top. That culminated on Sunday night, and that started what I like to think is a freeze up in the market from a monetary standpoint. The liquidity just dried up. The Jeff Carter Points and Figures texted me that he saw some stress in the muni market that had locked up. If you look at the SOFR options market, the probabilities of rate cuts today are the same as they were back before the tariffs were announced. So that implies to me that the majority of the move in the front end of the curve was all a flight to quality trade. It was all insurance money that just got burned up. And then I think the bond market was a lack of liquidity and some of that basis trade that got unwound. That basis trade is similar to 2018 when you saw people, and I don't know if people understand what the basis trade is, but you trade the cash market against the futures market for a spread, and the spread's there, but it's a small spread, so you have to lever up. So you pledge the underlying secured agreement, that could be a SOFR contract, that could be a bond or a note, to a dealer, and then you get cash back, and then you use that cash back and you take the other side in the futures market. So you're really levered up in that trade, and when that trade starts to move out, you get liquidated, you get margin called. So that forces selling into the existing positions. And since the trend was so overbought, they had to go out the other way. And I also think there was a little bit of foreign intervention from some central banks selling dollars to free up cash. And I think all of that culminated in a perfect storm where you saw that massive sell-off in the bond market, which really put, I think, the pressure on the administration to make some moves. I was just talking, just got a DM from a buddy of mine who's a PM, and he's like, it's pretty funny that all the hedge fund guys gave Trump all the money and then they got burned on their basis trade. So I think that's kind of where
Yeah.
we're at. We got 5 minutes left till the number.
I want to ask you a question, Donnie.
Shoot.
Yeah, we got the number. Remember, we got the number in just a few minutes. There might be a little lag between you and us, you and I, so I apologize for that. But
No worries.
so we got the number here in just under 4 minutes. So I want to do two real quick things with you. I want to number one is I want to ask you quickly. You talk about the stress in the credit markets. Do you believe that was the biggest reason why the administration came in and did the 90-day pause versus like it was
Yes.
part of the overall plan altogether? Yeah, so you believe that? Okay.
There's no way this is a plan, dude. There's no way.
Come on, I know.
I mean, Bessent might be that smart, but he's the only one that's that smart in that room. And you got to remember, Bessent worked with Soros and Druckenmiller, and he was part of the entire Soros trade, Druckenmiller trade with the Bank of England. So he understands market stress and he understands central bank constraints. And he doesn't have an accommodative Fed. So, I mean, the Fed will provide liquidity through reverse repos and special vehicles. He'll make sure that there's an opportunity for people to place duration to get liquidity, but he's not going to cut rates right now. And that's really the key underlier in the SOFR market. If you look at DCP, where is it right now? DCP is 96.47, right? So it's 3.5 bips. So it's telling you you're going to get 3 cuts between now and the end of the year. That went out to almost 1.5 cuts, 1.25 cuts at the peak on Sunday night. So that is all insurance money, that 3/4 of a cut that just got burned, and we're right back into what I think is the mid baseline. But you had 2 questions. What was your second one?
Yeah. The second one is CPI coming out here in just 2 minutes. In a minute, if you possibly can, before we get to Shai, because we're going to have Shai do a preview and then give the numbers. Give us the 3 scenarios. Hot number comes in line, soft number, kind of expectations of what you see happening in the bond market.
Hot number, I would expect the front end of the SOFR curve to get sold. It was down 30 on the close. It rallied up about 10 overnight. I would expect the long end to show more signs of stress as well. I went long the 10-year yesterday, and I just sold half. So I am still long some of the ZN M5s going into the number. Soft, I think that just makes the market happy, and you see the ES catch a bid. The reality is it's too soon to get any of the inflation tariff data in there, or the tariff data into the CPI numbers. And then it's going to be wonky for the next 2 or 3 numbers anyways. So I think the market's going to discount CPI and PPI for a little bit here, unless it's really out of line.
Yeah, no, great thoughts there, Donnie. It's great to get, your thoughts, someone who stares at this bond market more than anybody I know.
Right.
And so, Shai, preview us. We're a minute out. I'm going to keep the 10-year up. We're going to let you talk about a quick preview, give us the data, and then we'll go to Donnie after that with some initial reactions. So what are we looking at coming into this number?
So we got CPI month over month. Survey is 0.1%. Prior was 0.2%. Year over year, prior was 2.8%. Survey is 2.5%. So they're expecting it to go down. Then we also have initial jobless claims. 223K is the survey. And then continuing claims at 1884, okay, which would be down from the prior that was 1903.
Yeah, and so anything coming out on the tape, where people are leaning one way or the other, where do you think more people are looking for this number to come out at?
Well, I think on jobless claims, again, people are going to keep looking to see if those Fed workers really show up in this number. So far, they haven't. Again, my argument is a lot of them got severance, so they have no need for the next few months to file an unemployment. So,
Here we
but
go.
we'll see. All
Here we
right, so we
go.
had CPI month
it's
over
soft.
month is minus 0.1% year over year, 2.4%, so colder than anticipated. We have initial jobless claims in line exactly at 223, and continuing claims at 1850, which is a little slightly lower than the survey.
So Donnie, initial reactions, what are you seeing across the curve?
I didn't even see the number, but the bond market took a nice bid. 10 years up another 10 pips from where we were this morning. Let me see what else we got back out of that screen.
Yeah, 10's at 4.28%.
Yeah.
You know, equities,
ES
like you
pulled
said,
a little
Donnie,
bit
they
back.
rallied a little bit on a soft number.
Yep.
Yeah.
We only got a
You're
little bit
gonna
on the
like
front
that,
end of
right?
Z5. Yeah, I mean, I guess it's kind of like everyone's like in firefighter mode right now. You know what I mean? It's like if you can get less bad news and more certainty, things can stabilize. But if we get additional stressors, that's where the pressure is going to come back in, and we'll go back into that reactionary mode. Right now, it looks like the bond market likes it.
Yeah.
From the front of the curve to the back of the curve, everything's got a nice little steady bid to it. So, and that's just really stabilizing. I mean, if you look at the ZN M5, it's really on its profile, on its TPO. It's just above its value area, and the majority of that contract volume really was expressed and traded down in this range, in the 110.21 range. So it's good to see us above that. SOFR is very far above that, because that was 96.01, because we had traded there for so long. So you could make an argument that because the June contract on the 10-year is so young relative to the duration that's expressed out on the Z5, that you've got more time to get a volume profile in there. But that tells you that the market wants to give you lower rates. The market wants Fed cuts. It's really this inflation data that's going to confuse everything and hold it off. And that's the problem with the CPI numbers going forward, because you're going to see a bump in prices, but it's not necessarily inflationary from the bond market's perspective, because it's a one-time adjustment. So you'll hear stupid shit like transitory and, things like that. And it's going to be confusing to manage that going forward.
So Donnie, 2 minutes left with you. Give us a preview. We got CPI out today. You're trading these things actively. Is there any trade coming off of this number? What do you foresee happening in the coming sessions following the CPI data?
I would expect we see some moderation and a little bit of consolidation here, sans the Trump bombs. That's really going to be the driver. We've got time now before we get to unemployment. I really think the jobs number is the thing that's going to drive the Fed. So I would expect we try to get some consolidation, let the bond market kind of stabilize here. That's the entire intent of the 90-day pause, right? To kind of let everything breathe a little bit. The ES, believe it or not, I mean, if you look at a 4-year chart on ES, I use standard deviation channels of +2 to -2, -1 to +1. We're right at the midline now. We touched, when we sold off, we were at +1 standard deviation level. When we started to sell, now we're at we tagged the bottom of the -1 twice, and now we're right back to midline. So that's telling me the market's coming back to a little bit of a balance. I would like to see the bonds do the same. I would like to see VIX get under 20, and I would like to see D5 trade to 96.62, 96.65, another 10 bips, 15 bips from here. And I'd like to see ZN trade 112.15. And I'd like to see the long end ZB trade back up into the 116 area. I think would be a pretty good spot, but let me double check it real quick.
So a little bit of a bounce, and we could be looking at consolidation to slightly bullish scenario here for treasuries and bonds, which ultimately, man, I think it helps kind of slow things down in terms of equities. I don't know what you think, Shai, closing out before we let Donnie go.
Yeah, absolutely. I think if we can see some sort of recovery in bonds, we can maybe have some more calm in equities, and maybe we trade in a bit of a maybe we only trade in a 200-point range instead of a 500-point range.
Donnie, it's so great to have you here. Everybody on NinjaTrader Live, thank you so much for tuning in. Donnie's an old school guy. Know him. He's one of the good guys out there. Follow Donnie on X. He's one of the best. If you want to know what's going on in the bond market, he is the guy to follow on Twitter as far as I'm concerned. And everybody that he follows, that he sends me to, I've learned so much from him and that whole crew, because it's another world. Really, it is. It's another world when you get into the bond market. Hear him, Donnie, talk, and his experience was awesome. I can't wait to have you back on, my brother, and I wish you well.
Thank you. I appreciate it. Keep an eye on the long end. Keep an eye on the ZBM 25. You want to get back into this above 116 and hold around the 200, which is just a little bit like 117, 08, 10, like that level. That would be a really good indication that the stress is out of the bond market right now.
Oh, really good to know. Thank you again, Donnie.
Thanks,
I appreciate it.
Have a great trading day, guys.
Thanks.
Thank you for having me.
You as well. That was great, Shai.
Absolutely.
Any quick final thoughts before we go to Pharm on what we saw with CPI?
Market's going to like it a little bit softer because the Fed has kept telling us they're worried about inflation. We're not going to cut. We've heard it from several of the Federal Reserve members over the last couple of weeks. And so obviously equities are going to like the fact that it's a little bit softer and we're not getting a spike. That said, tariffs aren't, we got another 90-day pause before that would start to filter in the market again. So, yeah,
no doubt. Great preview this morning. Thanks for giving us the data. And I really appreciate, all the insight into the macro world this morning. It was great having you on with Donnie. So, all right, everyone. Next up, Pharm. What colors are going to have on today? What's he going to be doing? What's he looking at? Here he is, the Pharm Navy with the navy color. Everybody, before we get to Pharm, give Donnie the thumbs up, the like here on YouTube. He's a real gem, man. I got to tell you, I can't tell you how much it's good for me to see guys that I go back to the trading floor with, and then we got insight into the bond market we wouldn't get, I think, anywhere really else, and no other networks are doing that. So hit that like button for us. And now we got in Pharm. And Pharm, I've got a lot to talk to you about, because I got to tell you, Pharm, what did we say yesterday? Well, there was like this underlying bid in the market. You and I, we're not conspiracy guys. Maybe a little bit we are, a little bit. But come on, don't tell me that. Didn't that seem a little bit weird how firm it felt? Didn't you and I were looking at it going, this thing should be melting down, and it just didn't happen? Little did we know.
Yeah, that's right. Yeah, somebody definitely knew something, right? And I think the tell was when that the China retaliation. I don't remember what time it was, but it was pretty early. Maybe it was 7 a.m. or something. That bomb hit, and it was just brick walled, and didn't even get back to the overnight low. It was like, okay, I was far less bearish when I saw that, because that was interesting, and we were looking for those range lows to potentially build out a little bit better. And we'll get into that a little bit more. I mean, we kind of did. We spent a little bit of time there pre-market and a little bit of time there cash. But yeah, what an interesting day. And, definitely a lot of people emotional after really the last couple of days, right? I had people, and I'd ask you for what your advice is for new traders, because it seemed like Tuesday, coming off the highs, a lot of people were emotional, thinking they had missed a generational short, right? The generational lower high on the way to SPX 1200. And then yesterday, obviously, a lot of people felt like they missed the generational bottom there. So I mean, like, what's your advice on handling some of those emotions for newer traders? Because it can definitely be brutal.
For me, it's think long term and your short term results will get better. Every time I think about short term traders, they're in the heat of the moment. They're only focused on today. They're so caught up in what everyone else is doing. You see Twitter, the highlight reel of everyone making money. None of it matters and not all of it's real. Real life is that this business takes time. Not everybody's always making money. It's much harder than you think it is. If you slow things down, you trade small, you give yourself opportunities to learn from these experiences, you will be much better in the long run. I go back to my time I started in the mid 90s when I saw the doc. I learned how to trade long because everybody in the pit was just buying them. I started in the S&P pit. I was in there in 96, 97, and everyone's really mostly a long side player. Then you get the 2000 bubble, then you get 9/11, changes everything, right? And now it's more of a two-way tape bear market. And you learn from that, right? And so after I learned from that, when it came to 2007, 2008, I was prepared for it, right? And then 2008 was like a historic year for me in my career. It really like got me from just like paying the bills, making money, to all of a sudden I had an unbelievable year. And then I kind of blew a lot of it in 2009. It's just it's just the cycle, right? But then when COVID came, I was ready more for how that was. Again, it's existing long enough for everyone to know that these things, they happen more often than you think in the time of your career. You just have to be present to take advantage of them. If you didn't take advantage of this one, or you haven't thus far, it's still not over. Slow it down, but learn from it as time goes by. There's going to be something else. Nobody had this in their cards, right? I mean, we knew tariffs were coming, but we didn't know it was going to be like this. And so my advice is always, if you slow it down and your goal is to exist long enough, you will achieve that goal, because it's easier to think in terms, I just want to stay in the game, because that's what my mindset was. Because if you really want to do this, you will find a way to exist. So hopefully that helps people understand. I think that to me is number one. When I come in to this day, I want to exist. I want to end this business on my terms, not the market letting me blow out, or doing something stupid. I want to end on my terms. That's how you walk away from trading with a successful career. So, that's kind of this morning's rant, but I mean, it's real.
Appreciate that, Deli. It's I'm just going to say this, real quick and give it back to you. I mean, obviously this looks kind of heavy. We're already trading below where the CPI print opened, and that's kind of weak. I think this is another day. Remember a few weeks ago, we talked about watching RTY as the clue. I think let's watch 1853 to 1861-ish on RTY. If it wants to give that back, maybe it's a clue that ES isn't done giving back some gains. But let's get into your stuff here.
Yeah, no, that's good to know. So then let's start there. So Pharm's talking about the Russell. One of the things I noticed about the Russell is, so here's my daily chart, 821.34 moving average. My Boomer Bollinger Bands, they've been pretty good though, Pharm. They've been all right. When I look at this right now, range expansion still Bollinger Bands. That means when they're opened up like this, you've got also moving averages coming down. It gives me a good idea of just trend, and trend is still bearish, right? Russell goes up to the measly 8-day moving average and then rotates lower. And you talked about Pharm's areas, and what'd you say your ranges were, Pharm and Russell?
On RTY?
Yeah.
RTY 1853 to 1861. It's like right there right now. It just held
Right
1853s.
Yeah. Got it. And I look at this, we're back in the body of that big move at the downward pointing Bollinger Band. You start pushing down here, who's to say they don't give it all back? So, I'm still bearish Russell. I said this morning, I think that this news that came out was bullish yesterday, but today's a new day. The more I thought about it, I think it stabilized the market for a day, but this is still not going away. And I think it instilled confidence for a short period of time, but I think the market itself is still uncertain about the future. And I don't think that they did Russ really any justice by what was yesterday. I mean, it helped the big portfolios out, but I don't, to what extent, we'll see. Let's go to the 30-year bond, because this goes back to why we had Donnie on this morning. Donnie talks about probably some price stability here in bonds. He came in with a softer number. Kane talked a lot about this actually yesterday as well. It helps the rate cuts that's in the dot plot, or that's in the dot plot, like that even matters. None of it matters anymore, right? But if you look at the Fed Fund futures, what the CME Group's projecting out is 5 rate cuts. It helps that theme with a soft number. We did get that, which I think underlying bullishness can arise from that. But you got to watch the bond market. And the bond market's on the lows of the day now, and we'll see what happens. If bonds continue to go lower, I just don't think this helps equities. Similar scenario, when you look at the technicals in bonds, they're still relatively bearish. Soft number, let's see if they can get a bounce. If they do, I think that helps equities. Let's go back to 10-year, and then here's the 10-year micro. Here's the yields. When I look at the yields this morning, I look at them and say, you know what? They're still relatively firm compared to what they've been. Soft CPI yields have not come off much. 4.3 in the 10-year. Again, it's not screaming, buy the dip in equities. I mean, it's just not. I mean, it is what it is. They could do whatever they want right now with tweets, but ultimately damage has been done. And we talked with Donnie about how the credit markets were getting stressed. And although I do think it's some relief, let's not forget we were just on the brink of, some real bad things happening in the credit market. Doesn't make things easy to recover from with just a post. And I think that that's something to think about. When we get into equities today, when I look at the S&P, almost to the 21-day moving average, which is something that I look at just as the medium term, what's happening within trend. And it couldn't quite get there. Opened up relatively near the yesterday's high, made a higher high overnight, and have come back down. Similar to the Russell, Bollinger Bands are flat to open up. Just expect a lot of volatility. I look at this and go, man, this thing could be really wild still to the downside from here. I mean, what's it break 150 points from here? I don't think matters much. We look at NASDAQ real quick, similar thought process, actually pinned its 21-day moving average, which is, I think, again, not a bad short-term top, okay? Not bad. I'm not going to go to the Dow because doesn't really matter that much to me after everything I'm seeing in S&P and NASDAQ. What I do want to show for today is, and this is so I talked about it. I bought some puts last night. I talked about it. I actually covered some. I had some orders working into CPI that actually got pinged. I saw my phone was vibrating. And I think that what is going to be interesting here is I think that 52.15 is coming in S&P. It's going to come all the way that far back down. Why do I think that? If you look at the 60-minute, 55.24 is my 70% line. What that means is when the Bollinger Bands come out and come back in like we saw yesterday, my 70% line is 55.25. My neutral line is 52.15. That tells me that we go back to neutral with hourly bars close below 55.24, which we've had many of them now. Tells me just keep selling rallies until I see an hourly close above 55.24. My big brother Pax's big quarterly number, I think, is 55.09. So I think that that's also a big key area of resistance. I look at his work as well. 52.15, I think, is realistic. I don't necessarily think that we get there today, but I think even if it does get there today, I think that the trend, obviously, when you look at it, is still bearish, but I think that 52.15 is an area that they would hold. I don't think that they get much below there. And again, I'm not calling for it today, but I think within the next session or two, that's an area that we might tag. And if it holds there, right back up to 55.24 is what I see. So 52.15 has become a target for me and a pivotal area. So for me, it's sell the rallies as long as we stay hourly closes below 55.24. That's what I've got. See what you've got, Pharm.
Yeah, I like that. We've got, we had talked about this, box consolidation range that ES was forming. Basically the 3 days was Friday, Monday, Tuesday. And, we sort of dipped down towards the lows of that yesterday. And, again, I mentioned in terms of the low, I mean, it's an overnight low. That's not great. But it's in terms of location, I mean, it doesn't get better. 3-year back test, we broke out from that 3-year range. That was right there. It's perfect. That's a dream long. Overnight low on Sunday. Okay, fine. Maybe I can get past that. Really, if I had seen more time and volume put in near the bottom of that range, and I mean, really most of the volume was put in kind of above 5,000, really. So I don't know. It's hard for me to feel confident that that's the bottom given those circumstances. I know everybody was all very excited about the move, and I mean, like, I'm not entirely sure that's a healthy looking move. I mean, the VIX came off. I mean, how many handles did we rip, right? And the VIX came off. I mean, it left gaps on the 5-minute chart. VIX to me, when you've got 170 handle overnight range, VIX in the low 30s. I mean, it hit like 32 yesterday. That seems low to me. And I'm sure a bunch of people wanted to stumble in and short it, but when you're getting 400 handle moves and 170 overnight with no news, I don't know. So, for me, we've got, the top of this range, because again, I was looking at cash hours, only is roughly 52.80s up to 53.15-ish. And, as long as we build out above there, I think things are fine. The problem is, we left behind these enormous single prints, which you'll see when I get to the 30-minute chart in a minute, basically right there. And there's 200 handles of single prints, which now you would normally expect them to be reactive first touch, meaning that, maybe you find some bids in there and we could reclaim, the top of this range. But I mean, to me, if we're getting sucked back into this range, I mean, honestly, 52.15 might be generous. It can get pretty gross. And so, if you drill in on, the 30, got a few levels on here. You mentioned, what do you say, 55.24? I was using 29 to 34. Yeah. Same thing. Like, this is the first spot. And actually, I flip back to my daily first spot that I was looking to short. It didn't. I mean, you see, we talked, at the beginning of the week that we didn't really have any meaningful supply until 5500s. And, here's where there was a prior area of consolidation. And that's sort of where we came up to, tagged it, and market didn't like it. Before CPI, I don't have these levels marked on here. I found this interesting. I noticed 54.28.5 was last Thursday's cash hours low, and 54.44.25 was last Thursday's spike base. So we did get a spike into the close, and we left single prints there on the overnight profile on the way down. It's basically right here. So it's interesting to me that we are finding so much acceptance back below Thursday's low. That's just a few days ago, right? I mean, everybody's all bowled up, but we can't even get back into Thursday's range. It's a little bit concerning to me. But again, as long as we're sort of building out above here, these 52.80s, 53.15, I think that's bullish consolidation. That's basically a back test of your range. And, if you want to take a shot, I think that's kind of where it needs to hold. Because, again, you can see just looking at your 30, it was just one 30-minute candle. This is the prior high of day here. And, ripped these 200 handles almost in an instant. And so there's not necessarily going to be a whole lot of support there. In this case, I don't think, again, a quick dip in there, I think you'll find some response. But if we end up getting trapped in here, it starts to look kind of problematic to me. I definitely think you get towards your 52.15 anyways, and maybe we can find some bids in here just on some animal spirits. But I think bigger picture, if we're finding ourselves trapped back in the range that we were trading the first 3 days of this week, then there's potential trouble here.
Yeah, I mean, I go back to, I think that yesterday was a day where, I mean, I didn't catch one tick of that rally. I wasn't in it. I was actually in the studio watching it rally, and I'm like, man, I'm glad I'm just flat. And I was watching it, and then I'm like, okay, I would never sell this. And then I watched it on the close. It got to my 55-ish, 100-ish level, Pax's level. I got a signal on my 60-minute. I'm like, okay, now is the time to be short. You can be short small, and I'm really small. for me. Just buying a couple puts. I think that it's like I look at it and it just is like this is like yesterday was a day that was supposed to instill confidence, but I think in reality, so much more volatility is possible because of that, because it's only a 90-day pause. It's one of those things where everyone believed that they were going to stay the path. I think the market, obviously with the credit situation, credit markets were getting stressed. I understand that that was a problem, and they could say what they want. Most of us believe that that's the reason why they stepped in. But nonetheless, it's like now we've got this underlying factor if we don't know what's next, right? It was like, okay, we're going to stay the path. The market's going to figure it out. Maybe it went limit down. We would have blown it out to the downside, and maybe the market would have found a way, like it always does, to come back up in price stability. I think this it stirs the pot a lot. And I think, again, this thing is going to continue to be wild. I agree with you what you said on the VIX, like being low. Like, I mean, volatility is not going away, man. Like this did not change much. And psychologically, I think some people probably come in and maybe have a hard time now that this tweet has come out to maybe sell rallies. But I look at it and go, technically, it's telling me to sell the rally again. I mean, it's like, but it's going to be one of those things where everybody, I'd say this a lot, small and smart. You do not need to be a hero in this. And even for me, I look at it and go, man, it's so wide for me to be wrong. It's 140 points away from my resistance level. And I know I trade a little bit of a wider time frame, but it's like, man, I got to wait for a 50, 100-point rally in order for me to like even, add to this position if I want to. So I think just pump the brakes. Everybody come in, be small, be smart. We're at that time farm where it gets ready for you to go over what to look into today's trade plan. So give us the best you can, my brother, of what you're looking at coming into today on what you're seeing.
Yeah, I mean, we covered the big picture. As long as we're kind of above the 5280s, 5300s, we're probably okay. Definitely watching RTY so far. It's holding those 1853s, 1861s. I do think that could be a clue if it breaks that down and starts giving back yesterday's gains. That might be a precursor for ES. But I mean, as of now, I mean, like, look at this nice, beautiful distribution here overnight. I mean, that's super clean. So to me, there's pretty straightforward rotational trades while you're in this range, and it provides nice edges to work against. So to me, first moves, if we trade higher from here into the open, we come up, maybe we sweep these relative equal highs into these single prints that I had mentioned just earlier. We get rejected back down. I think you can take rotational shorts, probably targeting, roughly the overnight volume point of control, at least initially, and some rotation back towards the lower edge here. I mean, this is like as pretty as you get. On the flip side of that, same type of thing. We've got kind of relative equal lows here. So come down here, sweep out those lows, reclaim, find a bid, same deal, rotate right back up. So these are very clean volume profile trades that, just very nice rotational trades. You can play either edge. If we do come up here and we're able to, rip through these singles and find some traction back up into, let's call it 5450s. I was using 56 to 67, and that's an important spot off of last week's profile. So to me, if we can kind of get back above there, then it opens retests of, at least 5,500, probably 5490s, maybe, where I would start to get pretty careful. We had after the bell yesterday, there was a lot of prints that came in, a lot of volume. And I'm pretty sure they weren't like the big block trades like SPY and QQQ, what have you. And it actually shifted the volume point of control up for yesterday on ES if you included like the last 5 or 10 minutes. So I'm pretty sure they probably weren't buying the top of the rally. So, some of this weakness makes sense, but, early moves, avoid the middle, trade the edges, both sides, see what happens. If we get that traction below the overnight low, and especially if you see it on RTY first, then you're talking about a back test of those 5280s. I'll give it to 5283, I guess, but I would prefer to see, if I'm going to be bullish, holding like 5314s. So that's kind of what I'd be looking for. And if there's not an aggressive bid that comes in there, then, potentially trouble. But so far, RTY is holding. And, given that's ultimately going to zero, can't be too bearish as long as RTY is holding up.
It's interesting to me that RTY is a big part of your plan today. I mean, you and I talk every day. It's not often you emphasize RTY. Why is that such an important part today?
Yeah, just as sort of a precursor clue, I think it was a couple of weeks ago, we had a similar structural element. They do have similar structural elements on their profiles. And so when that is the case, I will monitor, what generally is the weaker instrument, which of course should always be RTY because it's trash, and see how that behaves at those structural elements. It just gives me little clues and subtle clues of what I might expect on ES. And so in that case, a couple of weeks ago, we had a P-shaped profile, and don't have time to get into too much of that, but RTY started to break down its P-shaped profile on its weekly. ES was still completely fine, was still in balance. Everything looked fine. But then everything just started following suit. And so it was just a early subtle clue to be on the watch for ES and NQ to break down. So I won't even trade RTY, but I'll look at it to give me some clues. And so far it's holding.
Got it. I will be watching it today myself, thanks to you and your morning prep. Pharm, as usual, thank you so much, my brother. Pharm Navy, hit the like button for my boy Pharm. Make sure you check out what he's doing with his Substack. Dude's the hardest working guy out there. Give him a like here on YouTube. Follow him on X. Pharm, it's yours and I's Friday for the morning session. So have a great weekend, my brother. Trade well today.
Have a great weekend, Deli. We'll see you.
All right. Next up, Tanya Army. Hit that like button. Tanya, good morning. Looking good. How are you?
Thank you. Good morning. I'm great. It's a fantastic week in the markets. Fun. I feel like I'm witnessing history because we certainly are. I think yesterday was the second largest up close day in the NASDAQ in history, which is crazy, right behind January 3rd, 2001. And that was just crazy to just watch. I wasn't part of that move. I just had a text message from my phone because I have alerts in my charts that send me text messages. And I was like, wait, what? It's like the NASDAQ is above like already 18,500. And I was like, what's happening here? And I checked my chart and then, yeah, bam, crazy news. To be released at like, what was it? Like 120, 130, right? Before FOMC minutes. So that was interesting to me. And yeah, I think I'm going to tell my kids about this. Yeah, it's going to be fun. It's a history in the making. What did I want to say though? I don't know if you guys had mentioned this earlier in the show maybe, but I did see some macro people I followed said like out of the top 20 largest rallies in the market, only 2 of them marked the bottom, right? And it wasn't the top couple of them. It was like one in 2020, March 2020, and one in 2009. So super interesting there. So I definitely think we might have a tradable low, but I'm not going to think that's the bottom. But yeah, we just take it day by day. And day by day, we have these humongous ranges, right? I checked the NASDAQ average true range the last 5 days is 1,000 points, which is just incredible. So yeah, let's get into the charts here. Yeah, this humongous rally back into on the daily, that's the volume imbalance here from where we dropped off and gapped down that day. And I was eyeballing the charts there actually. When we were rallying, I was thinking we'd get back to 19,000 to this swing high in a liquidity pool. And yeah, that's where we did reach yesterday. And then we closed even higher than that. But since then, we've been sort of just fading off a bit. CPI wasn't really such a large range considering like the ranges we're dealing with. It's kind of interesting how NFP release and CPI release are both kind of muted, I guess, because the market already has moved so much and had no really surprise factors put in from those news. So let's check it out. ES did not really hit the same swing high there. But it didn't really even form such a swing high there, but we do have this little gap. So still NASDAQ is relatively stronger than the S&P 500. Let's check to hourly now. Yeah, so we had a little bit of a break of a short-term low on the hourly, and then we've been pretty methodically respecting that for now. I think that's pretty important for me, this little hourly FEG, to see if we hold up this and if we close below another swing low, to continue maybe a retracement lower. Like we said, it's not the healthiest of markets. So, I mean, I wouldn't even be surprised if today could wipe out the entire up move from yesterday. Like that's happened before. Not that I'm like particularly so bearish, but I'm just saying I'm preparing. Always got to be prepared. Let's see here. Yeah, same thing for ES. And ES is the weaker sister. So I'd rather, if I was to short, I'd probably rather short ES. And also, I think yesterday, I mean, that's what I did yesterday. I was thinking, you know, perhaps more downside, and I was in a ES short. I held that into that. It was pretty choppy. Held it for about an hour. Thankfully, got, you know, stopped out just for -1 R, just one loss. Got stopped around like 12 or 12:30, and then I was like, okay, well, the shorts aren't going to work. I'm going to step away for the day. We'll see you tomorrow or after FOMC. You know, it makes sense. It's ahead of data releases, and then yeah. Good thing small losses are, you know, that's what we like to say, small losses are a pleasure, because, you know, they keep you from turning into huge gushers. So, and keep you safe, really. So you want either small losses, small wins, or big wins. That's what PAC says all the time. So we have this hourly. We'll see if this, this is like also moved down from London session. It started at 4 a.m. So I do wonder if, you know, is today's daily candle, is that high in for the day? If so, it's totally possible that it was made during the London session, this little intermediate term high. Yeah, if you look at the daily, we already dropped about, wow, 600 points from yesterday's high. It's kind of interesting here. Let me see if did we take it that high on? Yes, yeah, we did. Okay, that's really interesting, right? So we do have a little divergence there. For ES, or during Asia session, it took out yesterday's high. The NASDAQ didn't. So yeah, it's totally possible that the high of the day is in. I do wonder, you know, we have so many FEGs on the upside that we created, so much like, because the move up was so energetic. So let's see here. So we could definitely retrace further into this humongous fair value gap we created. It's humongous buy side inefficiency. I mean, buy side imbalance, sell side inefficiency. This just this humongous push up, right? This, man, insane. So where did that leg start up from? From here. So I'm just going to look at the fib to see where's 50% of this entire leg up. Yeah, down here, and that does match up with this swing high that we left here. So, it's totally possible we could retrace down to the 18,116 level. I mean, I wouldn't put that out of the cards as a possibility, or, you know, at least, let's see, what's 50% of this little. well, like a little humongous, this humongous gap.
Tanya, a
8150.
couple people have a question in the chat. What's an F? They're saying an FEG or it's an FVG,
FBG
I
is
think
just
you say
a
though.
yeah, sure. It's a terminology I use. Fair value gap. So I'll show you. Let me just remove this little fib. It's simply when I look at these bars and I like if there's a lot of momentum to the upside and energy to the upside, that means that price didn't stop, right? So I just look at when you have it's a 3 candle sequence where you have from this candle high before you mark out the top of it to this candle low, and that's your FEG. It's fair value gap. So it's essentially saying like price is likely going to retrace into this area because that's fair value. So many orders are left to get filled in this area theoretically, right? Because we just pushed through without much rebalancing. And so that's just me looking at this is humongous. Yeah. So it's also I call it a BISI, a buy side imbalance, sell side inefficiency, because it left buy side like it's a buy side imbalance. It's just sell side that needs to be rebalanced here. And often just looking at gaps, like gaps like to get filled. So you can see here when I marked out this one, and especially this is a swing high and it didn't completely fill in this fair value gap. So I do mark that as a liquidity level. It's potential we could reprice to here. And that's essentially where we did during that fake news release on Monday when I was live with you guys. It was crazy, where we pumped like 1,000 points in 5 minutes. And then, we rebalanced there and then rejected and pulled back. And that's where I like to frame reversals, or I like to frame those as price targets, right? And I think if I look at actually like the midpoint of this one, we did reprice the midpoint of it. And especially if it's a large one, I do like to look at that, like repricing to the midpoint of it. So that's why I'm looking at those things. This is just so large. And I think that if we were to retrace, we would get a little deeper. And that's why I look at the fibs as well. And I'll mark out what's 50% of this, right? We said like 8150, 8149. This is around 50% of this level. And also it does match up with around this little up close candle in the swing high, which I would call this a bullish breaker now on the hourly, which actually looks pretty good. So I think that we could retrace, to this level. And let me see, does that line up with, well, if I want to take the entire swing down, let me see on the 4 hour. I think it's probably the best to look at the 4 hour nowadays. Yeah, so we did close above a swing high on the 4 hour. I mean, I think right now, for now, we've shifted bullish on the 4 hour. And I think it is possible we can go up, reach back up into this 19,900, sweep this high before we go lower again. Because that's just where some buy side, some stops are. And there's also some gaps above this. And it's a swing high with gaps. So I think that for now, my bias is, relatively bullish, but I think we could retrace down into this zone, this area I've marked out before we go higher. So that's what I'd be watching for. Maybe at the beginning of the session, we have a stark drop off and we hit this level, and I'll look for reversals. That being said, these are 4 hour time zones and they're very large ranges. So me personally, if I'm going to look for like a reversal back to the upside, I would need it to be at least a 5-minute shift back to the upside. So I would look at swing highs on the 5 minute to get broken with displacements for me to join in on the longs. And also that being said, then if I look at if I'm entering on a 5-minute time frame, I'm gonna have wider stops naturally because a swing low on a 5 minute is naturally going to be a deeper stop than a swing low on like a 1 minute, but I'd rather have more confirmation in that way. Recently, I've just been looking for more confirmation, and then I'd rather just take like one trade, have it be like my one shot, one kill of the day. If you have like, I have like 1 or 2 bullets, right? So instead of trying a 1 minute shift in a 4-hour time frame when there's more gap, like such massive gaps down here. Same thing on ES. But so then if looking at the relative strength, right? I would rather long NASDAQ if I'm going long today, if it retraces into my zones. That being said, they're relatively in sync, but we did note that ES did take out yesterday's high, NASDAQ didn't. So if I see a short setup here for ES in the morning to retrace back into my levels, which would just be like, 50% of this move up. Yeah, like 52.15 or so. I would just essentially want a short ES. If I'm going short, if I find a short setup from this zone I marked out to go deeper. But if we just drop off and I don't find a short setup, then if we already get into this zone, then I'd rather long NQ from the zone down here to go higher if we get that structure shift higher. So that's my plan for today. And yeah, it looks like going to be large ranges again. So gotta just hold your horses down and hold the fort down and follow your process and trust yourself.
That's right. Yeah, I mean, again, I like how you look at if there's a short setup, you short the weak. If there's a long setup, you long the strong. I think it's something I take from, my years of my experience that if you try to do the opposite, it's never works out for you. I mean, not never. There's no never in this business, but it decreases the probability.
Yeah, exactly. Yeah, it'll still work out sometimes, but it's thinking about what's going to be the easier trade to like hold through and to breathe through. It's typically going to be, longing the stronger and shorting the weaker one.
Yep. All right, that's all the time we have for today, Tanya. It is our Friday, so have a great weekend. Thank you so much, everybody. Remember, Monday through Thursday, 9 to 9:15. Mondays, Tanya streams the entire session. Tanya Army, hit that like button. It's always a pleasure to see you, Tanya, and have a great trading day and a wonderful weekend.
Thank you so much. Have a great weekend.
All right. Next up, got my boy Trading Boxes. If you guys have been following him on Thursdays, man, I got to tell you, here's my guy, Chris. How are you? Good morning.
Daily morning. How's it going over there with you guys?
It's going great, man. I don't know how much you caught of the morning session, but been a lot to talk about, to say the least. But I think that, yeah. And, now that we're past CPI this morning, and we also had jobless claims. Let's not forget about that. I think that we're in for another interesting session. Let's hope we don't get any crazy new announcements or tweets or who knows what's going to happen out there. But I wouldn't want anybody else streaming on a day like today, coming off of yesterday, than you. You have been so consistent every week. I love your process. The traders that have been watching this have been loving your process. Take us through what you're looking at coming into this trading day.
Yeah, so yesterday was a pretty big day. For myself, I was looking for a higher low against, I do have a trade on here, so I'm watching that as well, since we came into support and it's sort of the line in the sand, just real quickly before I go over the plan. It's a line in the sand here, the 700 area. So I pretty much just bought the reversal back up via my entry model, and I'm looking for a move back up to these highs. And then if the bullish structure remains, possibly higher. I'm wrong below the 700 area. If we form acceptance below the 700 area and NQ for ES, it would be around 53.68. Then we can, per my approach, the trend will change. So let's go over that quickly here to sort of give you guys an idea of what it is that we were looking for. So I don't know if by now some of you guys may already be following, but I've talked a lot on trend structure, how, you know, we have in this downtrend, we had a series of lower lows, lower highs. When a trend ends, we don't have that sequence anymore. We instead have some sort of swing low, we push up and create a swing high, and then we start to contract, right? So instead of these lower lows, lower highs, or higher highs, higher lows in an uptrend, we now create a lower high sequence against the swing high here, and a higher low sequence against this swing low. So we were looking for a higher low here in order to push price back up and create or continue this consolidation. What we instead got was a massive breakout higher due to what took place yesterday. And we pushed up into some resistance back here on this first touch into 330s. From there, following the trend, we are now in an uptrend, right? We were in a downtrend. We were in a corrective structure here. And now we are in a higher high, higher low structure. So since I follow the 9MA trend religiously, we are possibly coming into some support area from this zone support, but also the 9MA is pushing up higher to create that higher low on the 4-hour. We need that higher low to remain in place in order for us to potentially target prior day highs. And even if we do continue, right, we do see this continuation higher, prior week highs. Obviously, we need to see what kind of negotiation takes place at prior day high if this higher low area holds. Because we're sort of looking at that from a 4-hour structure, we want to say, okay, what does the hourly then need to tell us? Let me move my first exit into 1.6R here, so it can take me out. So here's the hourly. Similar structure, but now on the hourly. So, you know, I brought up that corrective structure on the downtrend on the 4-hour. This is a uptrend now, okay? This higher low failed. I know the zones are making it a little bit noisy, just these expansions that we're seeing. These hourly zones look like 5-minute zones, right? It's crazy. So this uptrend ended, and what's now to start on the upside of this is a corrective structure, which is a wedge, higher lows, lower highs against the swing high, right? If that then is to take place, what we should find is support into this 2050 EMA cloud, which is aligns with the 700 area. And then, and for NQ, it's this 5360 area. From there, we should find that combination of that 4-hour 9MA higher low and this combination of what would be that hourly wedge to create that corrective structure. If that is to take place, right, everything's if then else for me. If that is to take place, then the 715 area in NQ, which I'm long in, how's it looking? It's looking good. The 715 area that is holding, then should hold, continue to hold, same for ES into 5360s. Challenge London's highs in order to continue that corrective structure, right? Which should look something like this. Now, I'm not saying I can see what's going to happen, but because I've studied and I created libraries of these structures and how a trend is generated, how a trend ends, and then what happens after the trend ends, I sort of have an idea of what price or the structure that price should follow. So that brings back to the support area. I took a long in NQ just because, like Tanya was saying, it is the stronger, you know, software and semiconductors have been leading this bounce higher. So I want to allocate my capital into the, you know, the leader, the one that has more higher relative strength. In scenario 1 here, as long as 700 holds, I'm looking for London's highs, 19,000, 1920 area. I will take partials along the way. And we then from there, can we get that corrective structure and maybe find a lower high against this other lower high and reject that 19,000? Sure, right? But we need to wait to see what that data looks like to get confirmation of acceptance, where scenario 1.2 would come in, and a continuation higher. Same with ES. We're holding this area. We're attempting to bounce. we now want to see if this forms a wedge. I call it a 50 EMA wedge because it's the consolidation above a rising 50 EMA. Do we push up into London's highs? Maybe this 54.43 zone, which was some support here overnight, attempted to bounce into it, but did not exactly hit it, right? So we're in this mean reversion structure at the moment, which in reality is we're consolidating yesterday's gains. How does that consolidation look like? This lower high, higher low structure. If that all goes to plan, we should find support here. We should bounce into that next resistance to then look for that next lower high, and then take a look at what's happening at that moment. And then, do we need to adapt? Do we need to change the plan? You know, that's where sort of a midday lunch update takes place, and then I look to make changes. So that's pretty much it. It might be a boring session. Yesterday, you know, I keep wishing that when it's my turn here on Thursdays that I get just a banger of a session where I'm as bullish as Kane was yesterday at those lows. I mean, that was a picture perfect area to get long in. You know, we had similar entries. But here, you know, I get the more corrective structure, the mean reversion where we're consolidating a prior expansion move. So I have to take what the market gives me and say, okay, if we're in this mean reversion environment, I want to get long into support, maybe short into resistance, and see what else we get.
Well, that's what we
pretty
got you
much
here, my
it.
brother, because, yep, you're patient, concise in what you're looking at in your preparation, and you know you're a great leader throughout the morning in these tough sessions. And you know it's funny because we've got all the different contributors coming in, and one of them is like, "Oh, that was the day I had this," or that, or that was the day I wanted to be here. And it's tough because you know even Merritt's Tuesday session was like you know tough until you know then the afternoon got busy.
Yeah.
I mean but that's why we have you guys here, because you guys are patient. You do stay true to it. And the traders watching this really respect that, and they love that. And I know that us at NinjaTrader love it because you're showing, you know, the whole process from beginning to end, how you prepare, then we see it in live conditions, and then how you execute it, you know. And so, as I say to everybody, I hand the keys off to you now the rest of the morning. I'm going to go sit back, watch like everybody else. Everybody, again, love what you guys are doing in chat. Continue to hit the like button for my boy Chris. It's going to be, I think, a busy session. Could be a tricky session, but we've got Chris here to help lead us. So, Chris, thank you again. Have a wonderful weekend, and yeah, I'll see you. I'll see you in chat.
Likewise. All right, you take care. All right, guys. Let's see if we are able to, you know, I did want this 1.6, you know, I'm big on taking first partials into 1.6 to 2R, which is this 260 to 300% area of this fib extension. But, you know, it is a range bound structure at the moment. What I sometimes do in a range bound structure is bring down my first partials down to the 1R area, which I could have done. I mean, it did go into this, you know, let's say that's 1.5R. That's a great partial area for me in a range bound structure. Now, if we fail here, then that's just telling us that price does want to push a little bit lower. And maybe we do form acceptance down here, and then we break, right? So that would be the bearish change in structure. But we haven't really broken that support. I mean, it's looking a little bit like it does want to break it. So we'll see what happens here. If we do sort of come back down here, form acceptance down here, which is a consolidation down here, we're about to have the open in 2 minutes. If we do form acceptance, then I'm going to be looking for some shorts. But like I said, you know, on that 4-hour structure, I'm not really, at the moment, I'm not that excited for that, just because we have no confirmation of breaking yet, right? We need to form that acceptance and then breaking in order to get that push lower. So let's see. We'll keep this for now. It's half of the size that I wanted. My entry actually should have been 793 versus 803, which is 10 points difference. I did try to double my size here, but never really pulled back. So I just got stuck with that half size. So let's see what happens here into the open. We have 15 seconds. It's, from looking at the structure, might get stopped out. Let's see how the open goes. Let me bring this back up to 1.6. No, if it comes back up over here, I will want to get out of it. Just some partials. So we have we've been in a sideways range really for the last 5.5 hours. We'll come to a decision point here soon, whether we do break out higher or lower. The 15-minute does look a bit bearish, but we're sort of seeing a bearish structure into support. I'm not the biggest fan. I don't look to short a zone breakdown unless we do form that acceptance. And then, like I said, in the prior sessions, we do form that structure that will allow me to manage risks to the downside. So let's just wait and see. It might be a little bit of a boring session versus yesterday, just because of the type of day that we had. I mean, it was just a massive, massive day. So it makes sense that we get some sideways to down action. This is support for me. Looks like I'll be getting stopped out. If I do, I'll have to wait and see what forms next for me. But the open and SPY and Q, not a lot of demand so far. The next area that I have here below support is the 250, 280 area. You guys look at this 4-hour here. So this is sort of the area that we want to see hold on both. If we do break lower, then we can backtest these other, at the moment during that time, they were lower highs in the downtrend. And you can see we reclaimed that. So a perfect backtest there in ES around 5280 and in NQ 250 to 280 would sort of be that next area of support for me. So if, let's say I do get stopped out here, then I'll be looking for a continuation setup from here down to those levels, right? I do need an exact contraction or acceptance, which for me looks like, oh, I didn't add it on here. For me, it would look something like this to show that we're no longer bouncing, right? To show that sellers are moving lower from these prior highs, these lower highs here, right? Up here first, then down here, and then here. If they can show up and continue to step down into that bullish support, then we finally get a breakdown, and then at that point, that's when I'm looking to short, right? I can't short unless that happens. We have no confirmation of acceptance, right? It's really that simple for me. It's a little bit of range bound. Just have to wait it out, guys. You guys long or short up down here? I need some boredom. It's been wild. It has been wild. I mean, the type of day that we had yesterday, it's pretty insane. I mean, on Monday, on Monday I was super aggressive. I was max risk. I was risking 5% of my swing account, my larger account. And I caught NQ for 1,500 points. I did buy some calls. I was in some QQQ calls for Monday's expiration and for April 25th. Those Monday, zero DTEs moved from $1.80 that I bought to $22. It was pretty insane. But yeah, for NQ, I think that was my highest points that I've ever made, 1,500. Points wise, dollar wise, I've certainly made more just because of other larger swings that I've made. Oh, maybe some internet issues from what I'm hearing on my Interactive Brokers account. All right, we're 6 minutes in and we're just sideways. We need to see if we can continue to hold and bounce. We don't have a good structure for me to short yet. I can't really participate on a breakdown. I think a breakdown for me here would be a little bit aggressive. I'll consider it. I actually like what ES is forming here. But if you see SPY and QQQ, I do look at that. I mean, SPY looks ready to break down here. Let me see. Yeah, SPY is, or ES, I should say. The feed is laggy. It might be my internet, guys. I apologize. I just heard a notification from not laggy. Okay, thanks. So ES is weaker, telling me that cyclicals are weaker. Let me look at my ETF list. Yeah, tech is holding up better than financials and the equal weight. So a little bit of divergence on both. Some of the people on here may call that an SMT. ES made a new low here, NQ did not. Usually that sort of divergence or SMT does indicate a reversal. So we'll see. Really not much to do here, guys. We're a little bit of range bound, right? Yesterday was a big move. We're just consolidating here. let's see if this divergence does play out and leads to a bounce, even though it's been pretty hard for NQ to really get above 865, 860s, let's say. And NQ or ES, let me turn this into red. You know, I did get some messages from you guys, and so has Ninja, regarding an indicator for these zones. We're still working on them, so give us some patience, and we'll see what we can come up with. Just because we're working on these we're working to see if these color changes are possible when price gets above it or below it, so it can be automatically updated. Right now I'm doing everything manually just because we're sort of working behind closed doors on those zones. It's still struggling to get back above there. We might get that breakdown after all. Yeah, I'm gonna get stepped out here. Do I want to short? It would be a little bit of aggressive on me to do that. All right, so we failed to reclaim 860s. ES failed to reclaim 5380. Let's see what happens when NQ takes out London lows. You know, I just don't have a really clear signal for me to short here. Yeah, you think so, Robert? Hopefully. He says color change above, below should be easy. Hopefully. This one's slower. You know, my aggressive side would be getting short, but I don't really want to show that side with you guys yet. Look, if it's like an A+++ setup, I would be aggressive. On Monday, I was extremely aggressive. I haven't been that aggressive since the drop in March. March? No, February, the initial drop. But if we're sort of going to remain range bound, I don't want to be aggressive. You'll take the short, Moises. Moises. It's breaking. ES is leading that move lower. I think that was the one too short that I could have taken. But you know, it's just this structure here. Small 9A, I call these a 9MA box. If this would have been longer in time, it would have had that structure, that setup that I look for. It didn't at the moment, so it's really tough for me to short like a 4-candle breakdown. There's the break though. Look, if you guys are short, awesome, 560. Oh, you're looking for 560. You're not short 560. All right, so the next area that I was looking for in ES was that 5280 area. We do need to form some form of acceptance down here now. So I do need to see a consolidation here for me to join on the short side, because what could be taking place is for us to take out London's low. I don't have it here, but it could be taking out London's low and and reverse, right? And because we're still in that sort of bullish structure, I'm not eager to short. I will miss the breakdown here, and that's fine for me. So let's see what we get. What we need to see here, if we are going to continue lower, is a rejection on the bounce into, when you see something like this, lower low, lower high, reject that sort of area here around 750, and then lead lower. So maybe if we do get that, I'll look for a short, right? This sort of area right here. But at the moment, we just took out London's low, and in Q, ES was already below it. Let's see what happens here. If we can reclaim it. So it's attempting. Gosh, what is this? It took you in. Let's see some of these comments. All right, so we sort of reclaim this immediate sort of support zone. You know, it's very small, but that's just letting you know that we're not seeing a breakdown yet. Let's see if we can reverse again. We should keep 3. I'm going to try this reversal once again. Now, if here we do reject, then that's going to be more confirmation for me that we are going to form acceptance and break lower. If not, then it's still support to me, right? I can't flip yet. Let's see what can happen here. We need a little bit more than this. See if we can take out this last candle's high. That would be a little bit better. You know, I'm still into the mean reversion mode until we really form acceptance down here and break lower. If we cannot do that, then look, it's still support, guys, right? For me, I can't argue that it's not. Let's see if we can continue. You get over VWAP here. I have different VWAP sessions. I'll have to test that later. You know, this is attempting to create that higher low into the 700 area in NQ and this 5340s in ES. The tape is a little bit slow. We should be expecting that after yesterday. I myself would be expecting some sort of range bound structure, which means we coming to support, maybe undercut it, create some sort of failed breakdown. Maybe there's a divergence or SMT into those lows, right? And we can attempt higher. But the tape is slow right now. So we really can't do much. If we form acceptance here, then I'll be looking too short. And I'll just look to ride that. You know, I do look at SPY and QQQ just to have a sort of like a quick look at RTH session. Since the open, which has gone sideways. So I think in the next 5 to 15 minutes, we can see some sort of attempt here. There we go. We're getting some action. Let's see if we can push up. Stop it. Let's see if we can get, let's see, that's 1R. That's 1.6R. Let's do 1.5R. Okay, so what I'm looking for here now is if we can form a wedge corrective structure. At that point, we would have acceptance, and then I'll be looking too short. Just not a fan of it at the moment. We're still range bound. I do have a limit on the trades that I'd like to do. So, you know, I already tried once. This will be my second time. I'll try once more, but that would be it. You know, it's you need to control that risk. I could have taken partials off, you know, in the earlier trade. If we do get up to here, I'll look to take some off. ES is leading the move lower. So if we break lower, I'm actually going to be looking for ES short. Let me do this. Let me close this trade. I'll give it some patience. And then I'll wait to see what the structure looks like here to put on a long or short. I just don't want to go through another stop if we are going to form acceptance and break lower, right? Since we're just range bound here, let me see what your comments are. We're still sideways since the open. I think this happened to me last session too, right? We were sideways the whole, most of my session. Do I want to get short ES? Let's see. Yeah, it wants to break lower here for me. I will try a short. Oh, I don't want that many. All right, let's see. SPY looks ready to break here. Yeah, looks like we're gonna break. Let me see here. Just range bound, guys. Let's give it some time. I'm gonna short. We need a break here. If not, I will be taking a stop. Market's just not moving. It's attempting to break here. Can we get the breakdown? We need some volume to come in. I think I'm going to close it if we don't break. There's just no action here. We really do need some volume here in order to break. Let's see if we can come down to, we have 638 right below this gray zone. This is a 5-minute zone. And then we have this 560 zone, which is the next hourly level. But, you know, we're kind of struggling here. We really do need volume to come in here. Let's see if we can break. we do have that divergence between ES and NQ. NQ is now leading the move lower, while before ES was leading the move lower. Now we have participation from both tech and cyclicals driving lower. Tech is still a bit more. I'm gonna move my stop here. We got some news here. I'm going to take some off into this zone if we get it. All right, out one for 60 points. Let's get that breakdown now. So we did sort of get this wedge here. And what this signals is that contraction that I was looking for, which is acceptance, where price tries to bounce. Look at this drop, beautiful. See if we can see this 560 zones. And then the main one, if you guys remember my next targets were 250 to 280 in NQ and 5280 in ES. You guys short? So let me just touch on this structure here that I was looking for. In all the prior examples here, we would come in, bounce, come in, bounce, come in, bounce. It's only until this exact sort of structure here where we started to find sellers step lower, right? So what do I mean by that? You have sellers here a little bit lower, sellers here. So they're stepping down, right, gradually. And as that structures, or as that pattern continues to take place, what you start seeing is these lower highs so right now we're into the 4-hour 9 moving average, and where that high low should take place, and why I've been so a bit reserved on taking short, but we'll see if it does continue lower. Because technically it's we do have some 5-minute divergences on the RTH session on these new lows. So before I continue that commentary, the structure that we are to see here now is a lower low, lower high, lower low, right? If that does not happen, if you guys remember my trades from the last few weeks, we get a reversal. And if that takes place, then the breakdown will not continue, right? We need that trend structure to lead price lower. So anyways, going back to this commentary while we wait to see what forms here. Let me see here first if I want to close more just because of my losses. All right, I closed another one just because of the prior loss. I'm going to leave one I'm gonna wait to see how this lower high forms and if it can drive price lower down here. If it can't, then we might be seeing a failed breakdown and more sideways consolidation, right? It's really not driving lower at the moment. But going back to the structure, eventually what you start to see is this structure that I highlighted before. We have lower highs, an undercut here, but lower highs, higher lows. It's all this is doing is creating a wedge, right? There's a correction through time. This is acceptance. This means that price is failing to bounce, failing to reclaim any sort of resistance above the support. And if so, price creates a wedge structure and then it breaks. So that was my short idea here. And if this lower high is reclaimed, once we put it in, we're attempting to put it in right now, then we're just going to go back into the range that we've been in. At least I did pay myself a bit. So we have the lower high here. I'm going to move it down to break even because we should not be able to reclaim the lower high if we are to continue lower. And, my concern here is that we are going to remain range bound. All right, we have our lower high. I need to add it here. I'll add it soon. I did add it over here if you guys see. So we have lower low, lower high. We now need to see a new lower low, okay, to continue that trend. Let me add this. All right, I have stop at break even now. We really need to see that follow through lower. Yeah, don't give back that stake, guys. So let's see what takes place next. Buyers failed to hold the 700 area. You can see the bounces that attempt to take place. It then led to a breakdown lower. And that was my entry, the breakdown. Once we formed acceptance, right? Earlier, we didn't. So you can see here that we're starting to fail that second attempt to push lower. If we cannot break lower, then we're just going to reclaim this zone, see a failed breakdown, and go back into this overnight range. Not much to do other than to wait. But what I don't want is to take a loss on the rest of this trade. So let's see if we can build down here and then break lower. If not, we are probably bouncing. I did share yesterday in the plan that I was looking for a pullback. So these earlier trades were my pullback buys. But once this area of support breaks, the next pullback area that I will be looking to buy is into in ES is 5280, and NQ would be 250 to 280. So this is kind of good. We're building down here, but there's still no confirmation. 4 hour is into the 9 MA, which is technically that higher low structure. But we just continue to have a slow, choppy session. Even though we're sort of moving lower, it's choppy, right? Hey guys, don't forget to like the stream here. All right, if you can do all of us a favor, let's help Ninja out and press the like. Good action here. Consolidating. We're at the moment failing to reclaim this 715 breakdown zone. Same for ES at the moment. But I'm just not entirely convinced that we break lower. But we'll see. I think if we do reverse, I don't think I'll be looking for a reversal. Just because what I would then want to see is price reclaiming, then holding above it and breaking higher, right? So let's see what we get. We are entering some oversold areas. All right, this is good, guys and gals, guys and gals. Let's see if it can really give us a drop. How much are we giving back? We're down 3%. Yeah, there's a pretty large gap down on the RTH session. We do have some divergences down here. Yes, RSI failing to make new lows. We do have a divergence in Delta. Delta has a higher low versus the lower low in price. Not for ES. ES has a lower low. I find that divergences on Delta and NQ happen more frequently and usually an indication of a reversal. I'm going to move my stop down. Let me see. just because of these divergences. And if we start to bounce back up, I don't want to be in that short. Hey, Curtis, I remember you. Great trade, man. 600. That's awesome. Yeah, we're attempting to hold now and bounce. Just range bound. We have like doji days on a lot of individual names. I don't want to stay in this. I'm just going to close it here, guys. Pretty boring session. All right, I get the slower moving parts of the action. Yesterday was a pretty insane day. Monday and yesterday. What took place on Tuesday? Tuesday was Tuesday was that drop. I mean, just that Monday session was really Sunday, Monday. That made my month, really. And I'm sure for a lot of you as well. And, you know, if on a day like that, you did go through some losses, it's unfortunate, but, you know, you sort of have to think of what was happening. We were extremely oversold. We were gapping down for a third time on, you know, on Sunday. You just heard everybody panicking. It was just a recipe for a reversal. And then the overnight action was constructive on Sunday night. And Monday comes, you know, I take a 2-minute reversal as big as my risk allows me to, which I was in NQ, I was in QQQ calls, I was in TQQQ in my swing account. So yeah, that's very true. I did have messages. People were messaging me, you know, friends that I know, what should I do about my 401k, etc. But if we reclaim this area here, I'm gonna get out of the short. And now lock in what, 50 points, I think. 672, 40 points. A lot of range bound though. Not much to do. So we can take a shot at new lows here. We reject. You know, this is some form of acceptance lower at the moment. Yeah, it is pretty slow. Break coming? I hope so. Let's see. It's just not the best price action. Sluggish, choppy. But you know what? We're making the best of it. What's the like count, guys? 319. That's great. I think it's 100 more than what it was. We have 600 in here. That's great. 50%. Let's maybe we can get it to 400 by the time the session ends. You know, I would say today is definitely more normal than the other days. We've just have had back-to-back extremely impressive moves. You know, eventually we do need to go through a corrective structure where we're just range bound again, right? Price feels almost sticky. And it's to be expected with this kind of with the kind of day that we had yesterday. I think it was the second largest upside move in one day. All right, so I got out of that short. It took me out. You know, we're just holding. We're not really moving. We can attempt a push back up. If we're able to reclaim the 700 area in NQ or in ES, this 53.43, then we can, well, obviously it'll push back up into that prior range. And then just look, Delta has been going up while this sort of corrective structure has been taking place. ES higher now. Yes, scalpers are loving this action at the moment. There's no real trend. I think the most of the move took place overnight when we dropped from these highs. I mean, that was the trend. You know, this is the trend. All right, so we're getting that bounce. I'm glad I got out of that short there. Oh, what's going on here? Right as the trend was changing, right on the 2-minute. So my trade setup on the long side would have been a reversal on the reclaim of this. It would have been something like this. And that can pay out. But so far, we're back testing the area that we broke down from. That's what we really need to reclaim to sort of confirm a push higher. We are into that 4-hour 9 AMA area, which is where the higher low should be taking place. But action is just not the best. Oh, in ES on the hourly, we do have some sort of divergence. We're also at the third lower low. I actually do like this for the long, but you know, any entry that I would have had, I would have been down here. So I'm gonna wait to see what the reclaim of 715 in NQ looks like. And for ES, this it's 5360s, a little bit lower. Look at that. Good job, Laura. Getting notified that the group, those in the group flipped long, probably got long here. Let's see how we can hold. Let's see. All right, so this flipped long. It looks like we're reclaiming, attempting to reclaim that breakdown level at 715 here. If we can successfully do that, then what I can look for is for some sort of acceptance up here, failure to reject back down. It would mean more chop, but at that point, we can sort of say, okay, let's look for that push higher, right? If not, we're just going to get more chop. This rejection, this EMA cloud is becoming, it's not acting as resistant as much anymore. So there's a good chance that we do break above it. I just need, I would love a you know, big day. Choppy action. What's this at now from this entry? If you guys are long, you guys flip long on that, great. Let's see how we hold this zone now. You know what it feels like? It feels like a day after a holiday. Yesterday was a big holiday day, and today is that hangover effect. And see how we hold here. This was that back test at this resistance area. If we can form acceptance here, then we can we need some of this to then set up higher. If not, then we're just going to push back down. ES also struggling with this breakdown area. Oh, I don't want that. Pretty much here. That's really what needs to reclaim for us to really get that push back up. We can reclaim it either back down or more sideways. But good trade on that last push lower. helped recover that earlier loss. All right, failing to reclaim this 715. Yes, failing to reclaim 5360s. We need, in order for us to get that bullish uptrend that some of you are looking for, you need to reclaim that. We failed, right? You scalping over there, AV? Let's see if we get some sort of wedge structure here. Yeah, you guys are scalping, huh? You guys are loving this action here. It's not the best for me. I'm a trend follower. I think this is, the only area where I'm okay with people telling me I'm a trend follower, All right, we got a higher low. Let's see what it means on this second back test of this 715 or this 5360s in ES. Slow day though. Should be expected. Hopefully, don't be super aggressive for one side or the other. Like we had a huge day yesterday. Look at that. Good higher low, good attempt. Now it has to reclaim. This is sort of resistance here. If you can reclaim that, then we can sort of start to look and say, hey, can we form acceptance? And then break out higher, right? But if you were looking for big trends today, it's not happening. Let me show you guys this 4-hour that we held. You can remember from my plan earlier, I was looking for a higher low against the 9 AMA or into higher support. We dipped here on the 4-hour into the 9 AMA here in yellow, are creating that higher low here for NQ as well, creating that higher low. So from here, if I were to say, okay, what's the next possible scenarios for the day is we hold here and we push back up to 974, 19,000 really. For ES, we hold here and we push back up to 5390, 5400 area, and then reassess, right? So if that's the structure, then what we're going to want to be doing, or what I would be looking to do, is let's form some acceptance up here to confirm that we are reclaiming this zone. So far, it looks like it, right? And then take that directional push higher into 19,000, right? Which was originally in my earlier long that you guys saw when I got on the stream. That was my target when I got long here. I was looking for these highs. They never really manifested. And ever since then, it's sort of been some sort of choppy downtrend. We did catch this breakdown, but in days like these, I have to catch whatever it gives and then step away during what may be chop or what may be some sort of negotiation around a breakdown zone, and just wait until I get a clear setup. You know, on the 15-minute, we did have RSI divergence, which I missed earlier for this long. Look at that beautiful push. If you guys are long, you guys are getting paid. So great job. What is this setup at? It's close to 1R here on the type of entry model that I trade. It's still a bit choppy. Just gotta wait it out. All right, we're reclaiming, we're attempting that. ES is back into this prior breakdown area. You can see how we're moving past this EMA cloud, which was resistance. So that's a bullish structure. But, you know, my long, if I was really considering that long, was over here. Would they stop here? And this was my third trade, right? So I sort of have to also, from a risk management perspective, limit that trading. Solid push up here, though. We're reclaiming London's low. We might have seen a failed breakdown there. So now that we're above here, I'll be looking for some acceptance for a continuation structure. And if we can form that, then that's my setup long, right? I can't really, this negotiation here or whatever this is, it's not really a place where I can manage risk on a long idea. As ES attempts to reclaim this zone as well, can we form acceptance and then set up the directional push higher, right? So far, this is that reclaim attempt. And what we now need to see after that reclaim attempt is acceptance to show that we're holding this reversal attempt. And then at that point, I have sort of the green light to say, okay, price has, you know, the structure has met my requirements for my directional model, and which is that 50 EMA structure, which I shared, which is what I took earlier, right? So this is the breakdown short that I took right here and got this move lower. I need to see that same thing up here now that we've reclaimed the 715 or in ES, now that we're sort of reclaiming 5350s, 5360s. If we can do that, then I'll have my structure and I have my, you know, the way that I know how to sustainably manage risk on a long or short idea, right? But until we get that, I sort of have to wait. It's pretty choppy. Here, let me show SPY here. You can see we've been in this range since the open. It's now been an hour and we're sort of just back in this choppy area, consolidating yesterday's move. And what we essentially caught the breakdown of on that earlier short was this. And then we saw a sort of reversal higher, right? But it's really small sort of structures that you sort of have to be executing if you are a sort of this type of trader. Who has runners up here? How do you define acceptance of a level? Is there a time of number of candles? You know, when we have a lot of momentum in the market, let me show you Monday. Monday was a really clear, or yesterday's action here. When there's a lot of momentum behind the move, acceptance looks like a very small consolidation. Let me show you Monday's action first. Can I go back to that? Where is Monday's action? No, this is Wednesday. It's too far back. So, you know, I wish, you know what? I can actually pull it up on ES and I'll bring it over to this side so I could share. So when we had that big push on Monday, right before or right after that tweet came out. Now, again, this action is just insane. So these hourly zones look like very tiny zones. But let me just show you here. See this? This is when we had that big reversal. So I got long here at the break of this lower high. That was my entry long. We reclaimed this 49.94 area. And this tiny just consolidation, that was a form of acceptance. But you know, if you were to say, okay, what's the candle count? And I'm waiting for a specific candle count, you would have missed this, right? Again, this is if you were trading the 2-minute. But this is what I call a 90-minute no trend in time, which is a sort of extended consolidation in an uptrend, which is 8 to 12 candles. This is 1, 2, 3, 4, 5, 6, 7, right under that. But this is a really fast form of acceptance that breaks higher. Now, if you were to say, okay, what is a more classic form of acceptance, that would be this sort of consolidation here, where you're sort of chopping around. You had this big extended move and it's consolidating. During this structure, what you'll get is some, you know, higher lows, lower highs, and then very tiny corrective structure before the breakout. And the entry is at the break of this sort of consolidation. So that's acceptance. It looks different depending on the structure, but it's, you know, the way I can say that it looks like is I caught 1,500 point, Curtis. 1,500 points in that move. My biggest point move ever. It was just simply great. Monday, I mean, there was a 7% growth in my account that day. And that's my swing account, right? Not the futures account, where I do swing futures. And so we're starting to get that sort of consolidation up here that I want to see. I have like 15 minutes left, but if we can hold here, I'm going to be looking to get long for that directional push higher. If we're not able to hold and sort of push back down, more chop, right? What can you do? Thanks, Curtis. Would you ever consider a retest of a zone level to be a form of acceptance? No, because a retest can fail. In that retest, you do not have confirmation that it's being supported by sellers until you find rejection, right? So something that I used to do in the very beginning, and maybe if, you know, very rarely do I sort of get short or long a zone retest is, let me read that question again. So you haven't considered retest of a zone or level to be a form of acceptance? No. So in order to get acceptance, you need a consolidation at that area, right? If you don't have that acceptance, that consolidation, for example, this is acceptance of this 715 zone before it broke down. Look at this prior action. Move lower and higher. So you see, you can consider that as a backtest of that zone or a retest. But if you were to say, oh, we're retesting the zone, I'm going to get short, you sort of fail. Here, you can see that there's a lot of negotiation taking place, right? Attempts to bounce, rejected. Bounce, rejected, right? So there's that negotiation that's taking place, that interaction between buyers and sellers, where it is in this moment that you have confirmation that sellers are moving lower from here to here. You have visual confirmation that sellers are moving lower. So this is, that. So once that acceptance forms, like I shared earlier, at that time, my spidey senses are coming up and saying, ooh, we're forming acceptance. This is where I can manage risk on a counter trade, right? Meaning a counter trade, a breakdown from the support area. So what I then look to do is I look for my wedge setup, which, right now I'm just drawing this, but there's actually requirements that need to be met that I track and I have a library of. But once this wedge setup forms, it's telling me that price is contracting for a move. And then once that breakdown happens, if it aligns with my plan and how I'm viewing things, I take short, which is what I did in that last trade I took, right? And then I participate in that trend. So that's what acceptance is to me. Others may have a different view of it. I would love to hear their view. Would be interesting to see what they see it as. But that's acceptance. We're accepting that level, right? It's just that simple. So let's go over this price action. We caught that short, or I caught that short. We hit some sort of support. We bounced. We attempted. Okay, so far it's an attempt to reclaim this breakdown area, which we got short at. It tried to bounce above it. It's now sort of back testing again from the top side, maybe possibly failing it here. And what this just tells me is that we're in a range. We're not forming acceptance, meaning we're not holding, AKA this sort of structure above this zone to now confirm that it's support, right? If we're not doing that, then I don't have my requirements met to take a long. What this just means to me is that it's chop around this zone. If it's choppy around the zone, there's no reason for me to interact here until we form that acceptance, right? What happened earlier? We did form that acceptance and I had to interact, right? So here it's just range bound. There's really not much for me to do. No worries, Rob. So here we're failing. We couldn't reclaim it, right? It's all this is saying is chop. Let me bring back SPY. Look, we're now going on an hour and a half of no range. So this is a scalper's market for sure. I'm not the best scalper. I do limit my trades during the day. So for me to sort of scalp, it's just very. It just I open up my account to too much risk at that point, right? And I don't want to do that. I don't want to enter some sort of overtrade habit and just take stops. It's just choppy at the moment, guys. Look, if you're scalping this, you're making, hopefully you're doing great and not over trading and getting stopped out. See, the thing with scalping for me is if we're sort of in this range, getting long or short right in the middle of it, you're sort of going to take stops, right? If you're short here and look for new lows, or if you're long here looking for new highs, when price reverses, you're getting stopped out unless you're taking partials right away, right? So failure here. Yeah, what are we at with likes, guys? 354. Come on, let's get to 400. Yeah, hacks. Thanks. Yeah, futures are great for tax reasons. It's taxes, once you start trading a large number, taxes are become, an issue. I have a mentor and I manage a large account for his, and we had to transition over to futures from options just because of the taxes that he was paying. He was making good money, but I think, and also the cost, is you want to make sure that you have the best commissions plan. And with Ninja has one of the best. What are we at with likes? 375. Guys, let's get to 400. That'd be awesome. How are my green and red zones determined? They come from just a lot of screen time. I don't want to share exactly how until the indicator comes out, but just from a lot of screen time. The thing with these zones is there's just not support and resistance. These color differences matter. Like the light zone matters, the dark zone matters. Meaning whenever we fail to hold a dark zone, that becomes that changes the environment, right? From a bullish to a bearish one. So for example, let me quickly go here on the 5-minute here. But you can see here on yesterday's action that when we reclaim this 18,700 area, 715, right here, it became bullish structure. Now, again, this is per my understanding of it. Once we reclaim this, the magnet for price becomes that next darker zone. If we reclaim that, or if we get above that, we look for the next darker zone. Until we can reclaim this 19,000 zone up here, support becomes the original breakout zone, right? So you sort of keep that in mind. Oh gosh, I don't want to do that. I'll change that later. In order to help you visualize who's in control. These zones help me understand who's in control. If you look at this action here, we were finding support here. And now we're breaking lower here in ES and NQ. You can see that it failed to hold this reclaim area, which was the support. Again, talking about zones, this was a zone to reclaim. It failed, and now we're pushing to new lows. But it's just, we've been in a choppy range, guys. But going back to the zone idea here, this dark zone, if we were able to break it, now we look for the next darker zone, and look what happens here. We moved right into that, found support, bounced. Guess what? We back tested that 19,000 area again. So now we're in this sort of range where this is the controlling or the governing environment here, mean reversion. If we can reclaim it, which we tried, then I'm looking for a move into that next darker zone up here, right? You can see that we're sort of dancing around it in this range, not really seeing much. We're in this sort of choppy structure at the moment. So because we could not reclaim the zone, then we say, okay, if we are able to form acceptance here, I'll answer your question right now, Lindsay, Dallin. If we form acceptance and create a wedge, then we look for that next darker zone as target, right? Of course, I want to take partials along the way, but that's how I sort of look at zones. There's a lot of education behind them, and for me to sort of just share, what these zones are, and there's a lot of context behind it because it's you have to really learn. And right now it's just choppy around the zone, right? It just comes with the territory. The lighter zones are the bull bear zones, the midway points between the darker zones. If we can't break below this lighter zone, which we couldn't, we are going to bounce back up to that dark one, right? So I align those zones with my trend structure that I follow to help me understand how I should need to enter, how I need to exit. Again, it's this whole big education area that I look at, that I consider, and that I have for members of the group. And but the zones are great. I mean, they've helped me change my life. Is the indicator something I'll be selling? I think with the indicator, I will have to include it at the moment, either yes as a selling it, or as part of joining the group that I have. Just because there's a lot of education that comes with it. Sure, I can offer it, and sure, you can use it, but your understanding of these zones are not going to be the same. In order to get the full value of these zones, you really need that education behind it, right? So I'm still working out the details of that. Yes, Curtis, I have a Discord where I help out some traders out. You can always send me a message on Twitter or X if interested, to learn more about it. But I pretty much share my approach and all the education that I can to help out others. You have really good knowledge of market behavior and context. Do you have any suggestions for books or educational sources on that topic? This is sort of a combination of support and resistance and trend structure. I wish there was a book on trend structure that I could share. It's one of the hardest things to understand, just because you're trying to analyze multiple time frames. And so that sort of level of multi-time frame analysis is really hard to grasp. And I have yet to find a book that really breaks down. I'd love to be the first one to write that book. For now, all that education is sort of given to, my group members in the group, where thanks, Bean and Greens. Best education is inside Chris's Discord. Yeah, look, there's a lot of hours of education. There's a lot of text and commentary. 2 to 3 times a week, I do a video review of my trades in alignment with the trade plan that I create every morning, how I executed, what the trend structure was, to help others on a daily or on a multi 2 to 3 times a day during the week. They can sort of review the price structure in alignment with what the trade plan was, trend structure, and really help us analyze for the next day, right? To sort of, Jinsey, good to see you. Couple
Hey.
members in there. I hate the word members. They're more like family. We become family over the years, and it's just a good group of people who are really out there to really make it happen, serious about it. Most of them have families. A little bit on the older side, just because I wanted to make sure it was not a group of people who were FOMOing and
Whoa, whoa,
YOLOing.
whoa, whoa, whoa. When you mention older people, what do you mean? Hang on.
Jim, oh gosh, you're no older than 25. Get out of here.
Oh my goodness. In my dreams. Chris, good job today, man.
Thank you. It's a choppy session. It was just yesterday was such a big move that most of my session here was just a little bit of a range bound action. Maybe we get some break here and we get some direction, but choppy for me this session.
Yeah, I mean, unfortunately, it looks like right now we're starting to break lower.
Yeah.
So
we'll see
We'll
what
see how it goes
happens.
through. Yeah, we'll see what happens for the rest of the day. So, but no, it's awesome, man. You'll be back soon, right?
Yes, next Thursday I'll be back here. Hopefully, I'm hoping for one of these Thursdays to get my shot at a big move. Everybody else needs to have caught one. Kane got one. I know Leo has caught a good ones. Soon,
Yeah.
soon. We'll wait. We'll be patient.
That's right. Yeah, that's right. You'll get it. You'll get it. It's awesome stuff, man. I love your not only your patience, but I love the way you describe what you're thinking. And that's the most important thing. Like you said, we're a community, right? We're all a community of people with a common cause here, and talking it through. It's awesome to hear you, man. So I appreciate you.
Yeah, thanks, Jim. Thanks so much. And I'm glad, I'm able to tune in here once I'm done or during the other days. And thankful for your discussions and commentary on this indicators that you're looking at or price action. Really good, useful information for everybody tuning in. All right, guys. So make sure you join, like for everybody, for Jim, and give him his flowers. He's here with us, and we're really thankful for that.
Awesome, man. All right, Christian, I'm going to take over. We're going to get into some midday markets here. We will talk to you soon. Thank you again for being here with us.
All right, you guys take care. All right, take care, Jim. Bye.
All right. All right, all right. That was awesome, man. I love that guy. Trading boxes. I think we threw in that X. Check out the chat, guys. If you're not in the chat, you should get in the chat. We just threw in the X, formerly known as Twitter handle for Chris. So let's kind of do some midday market analysis here. Even the S&P chart on the screen. This is a 10-minute chart, and a couple of interesting observations. So we have the London opening range and initial balance. That those purple lines at the top. 40 high was 54.87. The low was 53.89. So decent range, right? Big range. Today's U.S. Initial balance, the high, it just kind of like shifted, right? So the high of our initial balance was the low of the London initial balance. When I say our, I mean the U.S. So 53.89. So the paradigm shifted downward, right? The low is approximately 53.15. So that's kind of observation number one. This gray box here that I drew on the right-hand side, that represents the gap fill from the close of regular trading hours yesterday to the open of regular trading hours today. So that it's still a pretty big, formidable gap. As a matter of fact, it goes above the London's opening range high. So I pulled some stats from our friends at Edgeful. Edgeful.com is the website. Spelled with one L, by the way. And I said, all right, let's look back. Let's go ahead and look back 6 months and let's see what percentage of the time this gap got filled and what percentage it didn't. And this is based on regular trading hours, 9:30 to 4. And you see 77% of the time it was filled and 23% of the time it's not filled. I mean, at this rate, we're looking at, a not fill scenario, right? So it's, 1 in 4 chance that it's based on this look back that it's not going to be filled. And so we have, we'll see if we get any kind of rally going here. At least we have some guideposts. Now, keep in mind, you can go to that website and you could, instead of looking for 100% fill on a gap down, you could say, what are the chances of what's the history of this thing filling 25% of the gap or 50% of the gap or whatever you like. So that's available to you on that website, and that's why I like it. So right now it appears that this is going to be not filled on the day, but we've seen crazier things, right? We have a tendency to have that 1 o'clock presser out of the White House, so you never know. The other stat I have up here from Edgeful, it's way up here on the upper right-hand side, and this is based on, and I've been following the London Open more and more lately, and this is initial balance breakout by weekday, right? By weekday, and by today, and this is a 3 a.m. to 11 a.m. stat for East Coast time. So we did the math. And again, it's that same 6-month look back. And so 57.69%, it's almost 50-50, right? 57.69% of the chance we had a single break, which we have clearly, and 42.3% a double break and 0% no break. So again, it's looking unlikely that we're going to get that double break, but I'm going to keep it in the back of my mind just in case something sparks a rally, right? Flight here is looking for 5,300. That's an interesting level, Flighter, because it's right where the pivot is. And I like that level as well. It's right by the pivot. This is a daily pivot. There's probably some option activity there as well. I'm looking at a 10-minute candle chart right now. But you're right on point there. I think that might be a good target if you're bearish. But we'll see. Right now, we are just kind of stuck. I got to fix my fib line here. I'll move it down a little bit. There's no retracement yet, right? There's no retracement. London session, trend down, small retracement back up, and ever since then, trend down again. And remember the stats, like after a big 10+% rally, we've seen it in the past where the very next day was a little bit negative. And so we're seeing a lot of it negative. We're down 3% right now, down 166 points on the E-mini S&P. So this is kind of a big move. Bigger picture look on this, just for fun. Let's go ahead and look at a daily chart here. I've been relying a lot on that 8 EMA. That's that. I don't know. It's orange. It's an orange line here. It's kind of popping up against a 38.1% retracement on a daily here. Pretty decent sized candle, but again, the midpoint here is going to be key for me. Is the midpoint of this benchmark candle going to be pierced? It's called the piercing line. Are we going to close below it, or not? And I'm kind of just, this isn't math. I'm just kind of eyeballing it at a 5250 level, which is an even number. So that would be in my mind. If we hold above there, then maybe we could start getting a normal market action. If not, again, we could break down even further. So I know a lot of folks are still saying, hey, we're not done. The bottom's not in yet. I don't know if it is or not. Short Life Hack says 8 and 9 EMA are legendary. Yeah, I don't know what it is. This is a recent thing. I actually got it from Mike Arnold, who's a fan of these EMAs. So that's the story of the E-mini S&P so far today. This area, one last point here. There's a little low touch point here on March 13th. I built a rectangle at that low, and I drug it all the way across. Remember, support becomes resistance, and we're pretty much seeing that, right? The height of the rectangle is arguably that's part of the art of making rectangles. There's an art to making rectangles. This isn't all science, but that's kind of my now it's a resistance zone is what I'd call it. So that's kind of the mini S&P. Let's shoot over to the micro NASI down a whopping 3.32%, and again, similar structure here. Not surprising. And let me get rid of this guy right here. Actually, let me just fix this a little bit. So now we're down from the all-time highs that we saw back in February 18th, 16.5%. So that's still, we got a long way to go. That can't bounce. That's out the window. But the ADMA here is holding, right? Unlike the E-mini S&P, the ADMA, we're resting on it right now. We're sitting on it right now. The piercing line's a little bit lower here. And again, I'm just eyeballing it around 18,200, 18,250 in that range. This is, we'll see how much of a retracement we get back down in the micro NASDAQ from a long-term point of view. And let's just shoot over to the 10-minute chart and take a peek at what's going on there. Whoa. Let me open this up a little bit more. This is not the chart I wanted to show. Hang on. Where is it at? There we go. Again, I got some edgeful stats on my mind today as well, and they're similar. They're not that much different. Again, the bottom of the London's opening initial balance corresponds with the top of the U.S. initial balance. So we have a paradigm shift downward, right? We've never really traded above. We haven't traded above the initial balance in this particular market. So that's kind of defining the conversation right now. The lows of the day, 18,561. Right now, we had a little bit of a fight back on that last 10-minute candle that's still going. So gap fill. I didn't draw my rectangle here, but I could do it. Let's draw a rectangle just so you can graphically see what that gap is. And remember, I'm going to go back to the the close, right? Oh, and I didn't want to do it this way, but that's okay. I'll fix it. To where we opened. Let me just move this over here so we can get a better peek. All right, let me try that one more time. So where do we go? 1610 candle. That's right here. Okay, so we got to go up a little bit. That's where we closed. Remember, regular trading hours. Forget about the Globex stuff. And then we opened. The opening candle is that doji right about there. So this is the gap we're dealing with. And you have to ignore all the data before it. That's the whole key to this report. You can't say, "Wow, look at it. We filled the gap right away." No, you have to ignore it. It's the two data points are the previous session's close and today's open. Going forward, this is a going forward look, right? So we're nowhere near retracing. And let's see what we have here. We have a gap fill for the MNQ, again, edgefull.com. Looking back 6 months, and during that period of time, 67% the gap was filled, 33% was not filled. So it's two-thirds, 66%, two-thirds of a chance to get filled. And right now, it's not looking like it's going to get filled. However, one might say, well, if there's a big rally here at the second half of the day, maybe I can get some targets here going on my for my trade if I was bullish. The initial breakout balance, again, I took a look at the London session, and it's a 60-40 proposition. It's I did London session for a break, double break of the initial balance. So it was 60% chance, which we've achieved, of a single break. Double break would have to go all the way up here, and we would cover about, I'm just eyeballing it, about 75 or 80% of we'd have to fill 75 to 80% of the gap to get that high on the Nasdaq right now. The pivot's a little bit lower relative to what we saw on the E-mini S&P. The pivot right now is at 18,492, and those numbers are kind of something they're interesting. Daily pivot numbers are good. Everybody should have them on your chart. Oh boy, I know. 2020 says, Jim, it's possible these days. I know. I'm trying to teach an old dog a new trick, but it is. We have some wild ranges here. Let's just see what the ATR is on that note. I'm just gonna. Well, the ATR. Listen to this. The 14 period ATR is 873 points. Let's see how far we've gone so far today. Let's get that ruler out. Tag the high. Go down to the low. Again, this is, I might be missing it by a couple ticks. 4.24%, which is huge, but I'm going to change this to points. I'll change it to, let's see, percent. No, we'll change it to price. Hit apply and okay. 822. So we're 50 handles short of the average true range based on a 14-day look back, which is crazy, right? And this is a huge range, and this is a micro. People are saying, "Well, I don't want to trade the micros; they're too small." This is that's a lot of money move, right? That's a lot of money move. It's what is that, $1,600 or more? So keep that in mind. There's a lot of meat on the bone for the micros. In any event, we're kind of consolidating here a little bit, and just to I'm learning my lesson a little bit. Point of control, by the way, this is not a good volume profile. It's not a dominant. There's no dominant point of control there, but there is one, but it's not helping me. I did add the. This is partially due to Order Flow Labs guys and Delhi. Actually, I'll blame Delhi first, and then I'll blame the Order Flow Labs guys second. This anchored VWAP from the open. Regular trading hour anchored VWAP. The white is the actual volume weighted average price VWAP. The first band up is the first upper standard deviation band. The second band is the second upper standard deviation band. Below it is the first lower standard deviation band, and below that is the second lower standard deviation band. They're light blue. I had them colored yellow, but it was freaking me out, so I turned them off. I made them blue. In any event, so one of the things that as time goes on that I think is interesting is what's the slope of the bands, what's the slope of the standard deviation bands as well as the main VWAP, and then are we trading between one, two, or three of them? So in other words, here you can see that every time we get to that second standard deviation band, we're popping up, we're popping up, we're popping up, we're popping up. Now we're trying to challenge it again, and maybe we won't pop up this time. Maybe we'll break on through, or maybe the band will start arcing downward a little bit more aggressively. They are arcing downward right now. So this is suggesting, again, sellers are in charge, at least until we kind of get a break above that VWAP, which right now is at 18. We can round it up to 18,700 if you want. If the market does rally, then most likely it will arc up as well. So remember, it's tick for tick as we go. Boy, RSI, speaking of divergence, I don't know if there's any divergence here or not on the RSI. I mean, the trend is down. You could draw a trend line on with this software. It's really good. This is NinjaTrader software. It just kind of touching peaks. It's subtly down the RSI. If you wanted to kind of say, hey, is there any divergence here? I know some people like to use MACD for this, or stochastics for this. But I don't really see it just yet. And again, I'm on a 10-minute candle chart, so you might see something different if you're looking at a 5-minute or 3-minute or even a tick chart. So that's kind of the story of the micro Nasdaq. Now, I want to also cover, because Pharm was talking about this morning, and it was very compelling discussion that he had about the Russell. Let's just pick the Russell 2000 up, RTY. And we're trading south of his zone. I don't know if he called it the zone of stability or whatever he called it, but he said he felt that he was going to look at this as a forward-looking with respect to the other stock index futures. And we have a small case B as in boy volume profile here. It's a pretty textbook B as well. Although there are prices below value down here, we're trading that now. We're breaking on the bottom of that initial balance at the U.S. initial balance. Anyway, those bands are sloping straight down right now. So the Russell 2000 is looking pretty weak, and it has been moving from a percent point of view more than anything else, only because it's really more subject to economic forces, interest rates, supply chain, sentiment, and employment than maybe the large cap or even mid caps are. So the small caps they're when it's a negative gamma environment, which I think it is right now, you're going to have that more of a negative movement on the downside for RTY. Again, I don't know if I see any divergence here on the RSI. It depends on how tight you want to look at it. But right now, let me move this up a little bit higher here. And a really good way to see if there's divergence, to make divergence clearer, is to toggle your chart from a candle to a line on close chart, right? So even if you're using a really short time frame, you could toggle that, and then you could see the points better, because this is like a line on close kind of, right? It's just there's no candle down here in the RSI, but you see. One would argue, well, Jim, at 1040 to 11, we saw this rise in the RSI from a state of 35 up to 41, but during the same time frame, we see downward price pressure. That's short-term divergence, and divergence traders would say, well, I'm going to go in the direction of the oscillator, right? So that's an argument of going long right now. I don't see a chart pattern to suggest we go long right now, but that's what the divergence folks would tell you, and which is some people swear by it. If you take a bigger picture, then yeah, maybe there's no divergence here. So let's just kind of draw that same trend line. Now, this is again a roughly fitting trend line right here, and so you can see it's sloping downward, right? And the market price is sloping downward as well. So there's not a lot of conversion there. Ah, boy, that's the Russell 2000. While we're at it, we might as well look at the fourth one, our fourth stock index future. This is the 30-year Dow. Again, structurally the same, systematic price behavior. We are getting close to the pivot, though. We are getting close to the pivot. The pivot is at 39. Just going to round it up to 640. I don't know if anyone trades the mini Dow, the mini Dow. There's a micro Dow too, but it's a $5 tick. It's a $5 tick. So yeah, we've broke badly here. There's no fib line I could put on here to help us with any sort. There's no retracement in play right now, right? We have a single break below the initial balance, and then the top of the initial balance is pretty far away. So we'll see what happens. Anything could happen for sure. Short Life Hack says he's looking at that pivot. Yeah, these pivots, we look at gamma levels a lot these days, Jax levels and high vol levels, which are also pretty good. But the daily pivots are also something to keep in mind. And on a day like today now, because yesterday's range was so humongous that the pivots based on the range the previous day, we don't even see, I don't even know where, S1 is way down here, right? So on a day like today, when you don't expect another 10% move anyway in any direction, the pivots might not be as useful as today, but the actual main pivot is right here. So it's very useful to me right now. Some of the outlying parts of that, no. Yeah, Short Life Hacks, going back to, look at that. Speaking of pivot, going back to the mini S&P, we're at it right now, right? We're sitting at it right now. And it's, right by that 5,300 level, right? Let's just see if there's any options numbers there. This is my option cheat sheet. This tab here. I have a series of tabs at the bottom so I could easily kind of toggle around. And the other trick with the software is you could kind of color link, upper right-hand corner, the chart and the Superdome with your quote board or market analyzer. So that's kind of how. So anyway, we'll see if the pivot holds. I'm not the only person in the room that has their pivot painted on their computer, and we know a lot of times these levels are targets, right? Whether or not they are going to pick off stops, or it's going to hold as support, or this is where I want to enter. There's two entry ideas here, by the way. Entry idea number one is, well, I'm going to get long at the pivot, and we'll see if we keep rolling. Entrance idea number two is, hey, I want to get short on a stop if the pivot doesn't hold. Right? That's another completely different strategy. If the pivot doesn't hold, I want to get short on a stop because it's going to break through a level of support. As I said that, Short Life Hack said, I just bought them. Oh, sold them. Oh, no, you did. There you go. You're listening. No, I was listening to you. That's awesome. It says, sell them, clap, clap, don't copy me. That's true. That's a good point. Copy trading is not, think for yourself. But anyway, we'll see what happens here. So we wick through the pivot. We'll see if we have any more movement as we go. Another thing I'd probably do at this point in the day is, and we'll cover some other markets in a second, but I think I would anchor a let's see, volume profile. So I'm going to go ahead and click on that guy, and I'll start it from the open, and I'll pull it forward. I got to fix my colors. It's probably hard to see over those lighter green candles, but and then the lighter red candles. But this tells me what's the structure, what's the volume profile during, forget about anything that happened before the US Open, the regular trading hours. And it gives us kind of a sense of where price happiness may or may not be. Now, this profile is not that bad. It's not perfectly bell-shaped Gaussian distribution, but it's not too wonky, right? And what draws my attention are the volume nodes, right? There's a volume node right here, 5316. There's a volume node up by the point of control, and this is actually a range here from 33 up to 38. There's another pretty decent volume node up here, or cluster, or whatever you can call it, whatever you want, 50 to 60. And then we kind of taper back off to that, that curve. It just kind of curves right back down. And, most of the price action is right in the middle, right? It's a little bit skewed to the top. And you could kind of see the bottom of the value area here actually matches the bottom of the value area for the session volume profile. The top of the value area doesn't match, right? Because we had all this action overnight. So this kind of double downs on, kind of double down for me on the area of this area of importance right here, that 53.26. So right now we're just kind of straddling that pivot, hanging out. And this is looking bearish right now, for sure. Yeah, Flight Air says very thin structure under 5,300. Yeah, yep. I agree. Remember, we want to look at that piercing line on the daily before, I pull the fire alarm. But we're not we're not there yet. Yeah, so here's the problem with that. So that's a great comment. Short Life Hack says, man, that pivot move is weak. It might scratch it out. I expect more violence or momentum. I'll use the word momentum instead of violence. We're a friendly trading community. It's all passive traders. So the problem with a lot of these targets, when you're in a high vol environment, VIX, I don't even know what the VIX is. It's probably, do we even have it on here? VIX is 40. So when you have these extremely bearish VIXs, you have these huge overnight ranges. They have these huge daily ranges. Now, and then you have these big candles. So when your target, when you achieve your target and you get in, you have to kind of adjust. At least in my mind, I think it's important to adjust the expectation on how much heat you should take on your trade idea before you're wrong, before you think you're wrong, right? And so that's what I'm seeing right here. You're seeing we wick down, see the low, 92.75, and the pivot's at 02. So it was pretty much a 10. We're talking about a 10-point wick down. Now we're continuing our destination, right? And one might say, aha, well, what if we keep going lower? Well, okay, there's a point when you definitely want to consider getting stepped out if you're long. But I think that what I'm trying to say is sometimes you have to give it a little more room to take into account the size of these candles, these recent candles. They've been pretty big. This is not normal market dynamics. I mean, we had good CPI numbers. We had good CPI numbers, really good CPI numbers, as far as I could tell. CME group is still tracking three rate cuts. So why are we selling off here? Why is this so negative? Well, we still have a lot of the tariff situation is only temporary. I know 90 days is a long way, but 90 days comes fast. So there needs to be more clarity there, I think. Curtis says, just 1,000-point candle on the NQ yesterday. I can't believe I just said that out loud, because you're right, Curtis. That's like, it's just so unique and special, depending on what time frame you're talking about. That's just a really, really big candle. So you got to be nimble, you got to be quick, and pick your spots. Patience is the key of the game. All right, let's see where we're at here on the downside. I don't know that I have any other downside targets here. Let me just go back to, I don't have any more downside targets. I mean, this is a lot of, on an intraday chart, this is a lot of, this is the deep, dark sea, that we're looking at right now. I remember the 2000s. I remember them well. Anyway, yes, yeah, we'll come back. We'll circle back around and take this, but all the stock index futures are down pretty big right now. Do I expect a 10% down day? Probably not. Probably not. Crude is on the move. Gold is, let's take a peek at gold. Hang on a sec before we do that. We're going to hold tight on gold because Shai's going to be in with me and in a few minutes here, in about 15 minutes, and we're going to dissect crude, gold, platinum, silver, and copper together, and you'll kind of get a double dose of what's going on. So let's go to the 10-year notes again, and I want to start with the daily because this is, what is this? Oh, that's from the Treasury auction yesterday. So we had a 10-year note Treasury auction yesterday. It was like right before, thanks, Curtis. It was right before the tweets, they can't call them tweets anymore. The X's about imposing the tariffs. This was before the auction. So it was above average demand. We had a high yield of 4.435. Previous month was 4.310. So the yields were a little higher than previous. What's that? 13, 14 basis points. 59, almost 60% of the competitive bids were awarded at the high yield, right? The Treasury Department wants that lower, of course, because at the high yield they have to pay out more. So it's kind of a neutral number. That wasn't a great number. Bid to cover ratio 2.67. Surpassing the 10-year average at 2.56. For bid to cover ratios on a 10-year, people, give you different ideas of what's good or bad. 2.5 is like above 2.5 is good, below 2.5 is bad, but everybody will give you a definition on that. And we did have some foreign investors come in and pick up some of these as well. So it was probably, this was better than expected. But if you just kind of look at this area of support here, this rectangle that I drew, I mean, this is long-term support for the 10-year note, right? And remember, we're inverse to yield. Yield right now is tracking, it's down about 5 basis points from yesterday, 4.329. We could pull up a yield chart in a second. But this is good support, and we're seeing it kind of even through all of this caustic price action. 110, 12 half about. You could use that kind of rectangle to give you the range of where the support is. Has been pretty steady, Freddy. The moving averages were kind of slowly arcing up, but then we had that price dislocation, this wild move up, and then this wild breakdown. And in treasuries. Now we have stability, right? We have an inside bar. By all measures, this is an inside bar today. And inside bar just simply means that, and there's two ways to define it. The body of the candle, the closing price of the candle is lower than the previous candle's closing price. And the open price, the low price is higher, right? So the body is inside the body of the previous candle, and some folks extend that to the wicks as well. And you can see if you extend that idea to the wicks, you're still going to have a lower high and a higher low, making this an inside bar. So why do people like inside bars? Well, they like to look at inside bars, from a breakout idea, right? And it might be more important. You could apply that idea to a swing trade as well as an intraday trade, right? You could do both. So hey, are we going to break up to the upside, or are we going to break down to the downside? In theory, you could have another inside bar tomorrow, right? It'd be even a smaller body of a candle. So right now we're between that 21 EMA and we're between that 50 EMA. There's my 8 again. There's my 8 again. And you can see we wick through it once, twice. We traded through it once, twice, 3 times, and now we're kind of up against it again for a 4th time. And the distance between the 8 and the 21 is getting smaller. It's getting smaller. So I got my eyes on one thing. Is it going to cross under? Is the fast going to cross under the slow? That could be a bear signal. Just drilling down here. What's going on with the ADS trade? Everyone seems excited. Hang on, I'll pop back there in a second. Let's just take a peek. Intraday, 10-minute. Nice point of control. This is a bell shape. It's a Gaussian distribution. There's not a lot of volume. There's one point of control that's dominant, 111 and 4/2. It's kind of where my crosshairs is right now. We're at a Jack's 3 level. 1-day min, kind of held, not really. And here's that pivot again. Let me kind of just pull this up so we can see it again. This is why I love these pivots. Let's just go ahead and put a rectangle around it. Right there. These lows, the European session, the London Open rather, put the rectangle up against the lowest body of a candle, drag it all the way across. Nothing even is in there. And sure enough, the only thing that's in that rectangle is the pivot, right? And then Jack's 2 at the bottom. But the pivot was wicked through once, and that was it. And we kind of drove back up here. So that's, again, even in the treasuries, these daily pivots are pretty good. That's the story of the 10-year note. Let's go back just really quickly, look at that yield curve right here. So right now, the separation between the 10 and the 2 is 24 plus 9. What is that? 33. 33 basis points. Kind of flattening off a little bit. And actually, if you think about it, these were in ranges. These things have been in ranges kind of since we really started breaking down. We really started low. These yields really started coming back approximately February 25th. So for all of the month of March and so far in April, we're kind of going sideways there. Oh boy. Yeah, gold is on fire. We're going to get to gold in a second. It is totally on fire. Let's go back and check the pivot on that ES real fast just to see what it's looking like. Let me go to this chart's better. Yeah, so this is looking kind of negative. So I don't know if you're still in or not, but we kind of had a little mini xylophone pattern here. We broke through right here is where we really broke through. This was the 1110 to 1120 candle. We broke through the bottom of the initial balance and then just gained momentum. So this is another kind of good example of when levels break, they're like a dam. Water comes flowing out. Let's just kind of put this rectangle right here so we can see a little bit better. We wick to it, creating the low of the initial balance. Then we traded around, traded around, traded around. Then we tested it once. Buyers came back in. Tested it a second time. I'm sorry, we tested it once, and then we had a pause. Next 10-minute candle. Buyers came back and pushed us all the way back up. Next 10-minute candle. We tested it, and then we finally broke on through, and we closed below it, right? A close below it is a big thing. A wick below it's not a big thing. And then continuation selling. Pivots stood no chance. Continuation selling is continuing. So this is really if you kind of squint your eyes a little bit, we have a peak high, we have a lower peak high, lower peak high, lower peak high, lower, lower, right? When you see all of those lower highs in a row, and then you're going to look at, well, what's the lows? Lower lows. You got lower highs, lower lows. This is in a negative state right now, for sure. For sure. I mean, the next step down, I don't know, but it's, I'm not interested in hitting the buy button just yet. I think you got to wait, be patient. Oh boy. Well, Val lives down the block from State Street in Boston. I've been to Boston once. It's a fun place. It's a great place. Check out the Nazi. Wow, look at that. Yeah, again, the pivot has not held. Series of lower highs, lower lows. I mean, look at the bands. Look at the VWAP bands, the lower bands. The VWAP itself, the lower bands, we just can't get penetration above the first standard deviation band. I mean, it's yeah, we had it here, we closed above it once, but we haven't closed above that band since. Other than that, close below it, above it, below it, way below it. So again, that's telling me this is a negative market. We're 30, RSI is at almost at 30. Almost at 30. Yeah, I heard Johnson was speaking just now. I didn't see the news, but Michael, good to see you. Says funny the House passes a tax bill and the market sells off. Yeah, I don't know what the details of the tax bill are, but I saw that Johnson was speaking, so um, did not like it. Did not like it at all. Let's go ahead and take a peek. We have some time still. We're going to get shy in here in a minute. Everybody be patient. And I just want to talk about the US dollar for a second. I mean, look at the currency board. British pound sterling, green. Swissy, big time green. Euro FX, big time green. Canadian dollar, green. Aussie dollar, green. Yen, green. What does that mean? Well, it means the dollar is red, right? The dollar is down. Let's just take a look at a daily. This is a huge move for the Euro FX. I mean, this is just breaking out all my rectangles. It's breaking my rectangles. I'm not offended by it, but I mean, look at this. This is an old area of resistance. And then there's another old area of resistance. And boom, we're my fib line. It's just not even something that should be on my chart right now. Someone delete it because it is not, there's no retracement here. This is just kind of a huge move up, dollar week across the board. Major currency pairs are, I mean, look at the RSI. The RSI is at 73. So, you would say, well, Jim, it's overbought. It could be overbought for a long period of time. So, that's, I hate it when that happens, Ant. No, it's an opportunity when that happens, actually. Um, oh my goodness. Let's just drill into a 10 minute. I do not have a gap report for this market, unfortunately, but let's just see what's happening here. So here's an example of R1. R1 did not even slow this thing down. R1 did not even slow this thing down. Initial balance breakout is what we saw here. This is like a big initial balance breakout. I'm going to go ahead and I am going to put a rectangle in here, a broken rectangle, and just to kind of see what happened here. So this happens a lot. So you think about this. So we broke out of the initial balance by a little bit, right? It wasn't a huge breakout, right? We closed above it though. The very next 10-minute candle, and this is why I like 10-minute candles, was kind of trying to get back to the initial balance. And we wicked all the way through it. We did get into her. But then finally, we closed back into the rectangle. So very next candle, buyers came in, made new highs, and then it was off to the races, right? So this is when the breakout of that, what I would say, validates the breakout of that initial balance. On my radar screen here, still on my radar screen, only not as strong, and then boom, pop up. R1, forget about it. The VWAP bands are going crazy, arcing up pretty strong here. We're trading above the second standard deviation. I don't even put the third standard deviation bands up because you don't get to them a lot of times, most of the time. But recently we've been getting to them a lot of the time. So yeah, it's if Jade Cap took along, then it's a good trade. I mean, this is a really good trade. This is a good market to trade. There's micros on these also, you guys. We've done 260,000 contracts in the Euro FX. Don't get confused with Euro dollars. That's something different. Euro FX, and that's the currency cross, the currency pair. The micros, it has an M in front of the symbol. It has an M in front of the symbol, and they trade in unison. It's the same basis for that market, except it's 1/10 the size smaller. 53,000 contracts. That is amazing. That is super, super amazing. So these are good contracts to trade. Some of the micros and some of the currency pairs maybe are a little light in volume and you might want to stay away from them. But some of them are not. And so keep an eye on those as well. I think it's Euro FX, Japanese yen. Those are the two biggest crosses that people tend to pay attention to. And not only the futures Forex, we'll call it futures Forex or currency futures markets, but also the over-the-counter Forex. So I'm sure a lot of you guys would have traded that before. So short life hacks says the 10-year is a 10-year yield is a good contract to trade. Yeah, I don't know why they don't have more volume, to be honest with you. It's the 2-year. I'm spotting a 0 right now, right? So there's going to be a market maker making a deal, so we know what the price is. But yeah, these are great markets. Hopefully they'll gain some traction. Anyway, having said all that, it is time for hot commodities, and we have some hot commodities. We're going to get Shai in here right now. Shai, how are you?
Good. How are you doing?
I'm doing pretty good. How you doing?
How you doing? So you were just I just wanted to quickly, you were just talking about FX futures, let's call them that. The dollar is down almost $1.70 today, which is a huge move in for FX for certain. So just wanted to point that out. I think those markets are going to be get really good if you like trading some volatility. Generally, they don't make those big of a move. So keep an eye on those. But let's move to some commodities.
Can I ask you a question really quickly? So can I ask you a question on the dollar real quick? So with a big move in the dollar like that, what is that telling us? What's it reacting to? Is, with respect to what's going on in Capitol Hill, is there a driving force that's making it break so much?
Well, I think, and we've talked about this before, that the administration wants the dollar down for these tariffs. Now, I know that we have a 90-day pause on that. But we are seeing some selling of U.S. dollar by the central banks right now to cover liquidity issues. So
okay,
I think this is really what we're seeing right now is central banks, other countries' central banks selling dollars right now.
All right,
but
what do you want to look at
let's
first?
move on to. I want to look at gold first because spot gold just made a new all-time high. The futures haven't. 31.02 is the high for the futures market, but spot gold just did hit a new all-time high. So that is, we're still in the futures market up about $106 today, which is, again, another huge move after that sell-off. I mean, that literally, we talked about this a little bit yesterday, but really, I mean, your support area completely held, and we saw a complete reversal of this market back, looks like once it hit new highs.
Yeah, and I think you called it the other day. I mean, I'm not even going to dignify this chart with a rectangle. I mean, we're right. We're right at this. We're right there, man. 3,200 is a self-fulfilling prophecy. I think we have, the ADMA is almost going straight up right now. There's no real. I'm going to delete the fib line. We don't need that. There's no retracement whatsoever. RSI still got a lot of room. It's only 65-ish about. We're not even overbought yet. And this thing is still going and going and going. The idea that, pausing the tariffs didn't change anything. This is a terrific, a very bullish scenario. I'd probably think about drawing some type of extension, and just to really quickly do it, I should have done it already. This is going to be just kind of a loosely fitted. Oh, I did the wrong one, guys. Sorry about that. This is the problem with drawing lines in a live situation. Here we go. We'll go fib extensions, 3 points. Remember, I'm just going to pick a low, a high, and a low. And that gives you some kind of targets to think about. And we got a 32.23 and we got a 32.50 up here as well. But this is looking pretty darn strong.
absolutely agree. And I think that kind of that pullback did let some of that air out of this market so that it could continue higher. So I think that was a nice, healthy retrace because really we hadn't been seeing big retraces at all at this point. So I think that gave it a lot of room to move higher to the upside. Let's move on to crude oil. So we talked about this from the overnight low yesterday to yesterday's settlement was $7.23 move, which is huge on a day. And then it's bouncing again here, but it was down $3 at one point. So it gave up almost half of those gains from yesterday, and we're bouncing a little bit here. What are your thoughts on this market, technically speaking?
Well, first, I do want to point out, I don't know who it was. I think it was you, the $55 mark. We wicked to it yesterday, and we created a down. This is a benchmark candle. The green candles, there's two benchmark candles here. There's this big one here that we saw on April 4th, and then there's this green one that we saw here yesterday. And, I like to look at the piercing lines, as you know, and say, all right, a close below and the piercing line is just halfway through the candle. It's just a fancy term for that. And, I'm just going to eyeball it right now. I didn't do the math, but we get a close below it. I'm going to be more bearish. And this is just from a technical point of view, not from a supply and demand point of view. So I'm going to be more bearish in this market. And it looks like we're going to close below it. And then look at the ADMA. The ADMA is just, it's just crazy sloping downward here. So that's also a negative factor. RSI's at 31, 32-ish, we're just bouncing against that oversold area. But remember, we could be oversold for days and days and days. So you got to think about that. Use that RSI as a velocity trend kind of idea instead of, well, I'm going to get long now that we're at 30. Let me just really quickly take a peek at any kind of gamma levels that might still be around. We have that blind spot 2, a Menthor Q. They have a secret calculation. I don't know the math on this thing, but they have these blind spots. Blind spot 1 being the most important, blind spot 2 being the second one. And we just and look at that. We just wicked through it perfectly. There's no real pivot numbers in play or anything like that. And the volume profile is favoring a price right now at 59.70, which is where we are trading right now.
Yeah, and I like to point out, I think, aside from everything is kind of retracing from yesterday, a lot of this on the fundamental side for crude is because tariffs are even higher now on China. The latest one, they just added again from 104, and now they are 154. So we added more tariffs just an hour ago, maybe not even. And China is the second largest buyer of crude oil after the United States. So people are worried about kind of demand from China since they are the second largest consumer in the world. But we shall see what goes on. I mean, they don't buy much from the United States. It's just kind of in general having tariffs so high on them is kind of a negative for crude oil at this point. Let's move on to copper, because copper is interesting. Copper, again, holding that $4 area. Now, everything is retraced a lot since that move up yesterday, but copper's still hanging in there. And generally, they call it Dr. Copper because it's a gauge of the global economy, or it earned its reputation for being that. That may be a little bit out of date definition because of this energy transition and how much more copper the world needs. But this is an interesting one because again, it's hanging in there quite well considering it's an industrial metal. What are you seeing technically?
Well, before I go into that, I have a question for you on the China tariffs. Is there a point when they're just so high that China says, "All right, we're not going to sell you anything anymore"? I mean, how high could you go?
You know, I don't know. I mean, I think, I feel like we're playing like a game of mercy with China, right? And it's whoever gives out first at this point. So I don't know. We could see much higher tariffs on we're raising your tariffs, but not necessarily go into effect. You know what I'm saying? Like, because they keep pushing out the date, but every time they add on another tariff. So, but to me, this seems like a tit for tat. I don't know, 250% next. I'm not sure, Jim.
Good. Anyway, so just taking a look at the copper chart, I kind of agree with you. It's structurally stronger than maybe some of the other ones. We're touching up against that ADMA, at least on the open today. And the previous three candles are they're kind of wonky. If I were to draw a rectangle down here, it would be at 4 spot
It's a technical
10.
term.
Yeah, it's it's in the CMT test. If you're gonna, it's just what wonky means. But I mean, if you just compare yesterday's wick high to low with the wick on with the high to low on the 7th, they're the same size, right? So this is that when I see that in a chart like this, I'm thinking, yeah, and then we have this kind of inside bar, if you want to just say it's an inside bar because of the wicks. You see a situation where there's a lot of uncertainty in this market right here. The fact that we haven't retraced back down again and drove back down toward the bottom, I think is a positive thing. We're not even halfway down some of these earlier candles here. And then when you take a peek at the today's intraday chart, you see an okay range. You see, the London initial balance was relatively close to the U.S. and a U.S. initial balance. Remember, all the other markets are different. All the other markets, the U.S. initial balance was way off of the London. And so in this market, so now you can kind of see some price happiness around the point of control right now anyway. It's 4.36. And the pivot, I was just talking about the pivots in this last segment, Tracy. These pivots are awesome, especially in this kind of market when you don't have a lot of guidelines. So the pivots held pretty good support right now. And yeah, we have this wavy price action right now, but my guess is this point of control is going to be sticky throughout the rest of the session, unless we have some more 1 o'clock Capitol Hill press conferences.
Right. Some more bad news. I mean, this market could just consolidate too for, the next week or so. So while kind of the dust settles and we wait to see which countries that we make some sort of trade deal with. Then let's move on to platinum, because I thought platinum was interesting. We talked about that when it touched below that 900 level where I said I love to be a buyer there. And since then, made a pretty significant move higher. So it's, again, that's my go-to trade at those levels. It works until it doesn't.
Yeah. So, I just drew a fib line high to low, and folks will say, well, why did you use that crazy wick, Jim? That doesn't count. It does count. Someone did a deal down there. And we have an area of interest at 878. Anyway, we just drove back up. I just adjusted my rectangle right now. It's about it. The support starts around at 905. And, this is kind of a nice jump up here. We have a small body candle, small range today. We're right at that 38.1% retracement, which is pretty close to that 8 EMA on a daily chart. So this is kind of an important area right here, right now. The fact that we're not selling off more today is good relative to the other markets we're seeing selling off. It's kind of right now. It's a pause, I think. Here, the question in my mind is: are we going to close below that above that 8 EMA in the next couple of days and drive back up to that 50%, which kind of aligns itself with kind of an older area of support and resistance? So it's encouraging. And then if you just kind of pull out the old intraday chart. I have a 10-minute chart up here. This is a perfect volume profile. It's picture perfect. We have the value area in the middle. We have the point of control right at that Jax 1 level. There's all sorts of stars aligning right here at 935 spot 3, and we're just trading a couple ticks below it right now. Again, this is really nice sideways action. Market's happy right now. It's consolidating today.
So yeah, so we'll keep another one that we'll keep an eye on. But holding up again, also considered more of an industrial metal, also a precious metal. But again, I am pretty bullish this market, particularly if we can get past all of this tariff stuff and we can make some trade deals out there.
Very awesome. Do we have another market, or are we out of time?
So it looks like we are out of time, but
Oh boy.
we will hit some more tomorrow.
All right. Well, thanks for that, Tracy. Appreciate it. I think I might have froze here accidentally. No, I'm back. In any event, folks, thanks for being with us. We'll be back. We'll be back at 2:30. Remember, Order Flow Labs, guys, they've been on fire. They've been so incredible trading the close. It's could you believe it, Tracy?
Looking for it. I love hanging out with those guys in the afternoon. I'll be in the chat talking to you guys, and we'll see you this afternoon.
Yep, we'll be back at 2:30, folks. Thank you for being with us.